Oh yeah. Today is December 5th. Crazy year, huh? Hello, good morning, good morning. I'm here. I'm just reading. Hmm. Yeah. Good morning. Busting out the old Winston Churchill quote. Why not? The new Netflix Winston Churchill series. I've already watched it. It just came out. I watched the whole thing. Just sit there and watch a documentary about World War II for 4 hours. That sounds like a good idea. So now you idolize Winston Churchill? No, I've always liked a lot of the stuff he had to say. He's a conflicting guy. He has some bizarre idiosyncrasies, I suppose, is the right word to put it. And some of his old-timey beliefs about imperialism and all that stuff were really old-timey. It's strange and I think that's why I like him. I liked him. I always kind of liked him because he's not perfect. He's just a guy, and he has things that you may agree with and disagree with. May not like him for certain things. But yeah. So it was on my mind this morning. And I've heard a lot of Winston Churchill. I think a lot of people have heard him quoted because he was like basically a poet. But one of the quotes that I always kind of think about, he talks about like attitude and like optimism and pessimism and stuff. Guy was basically an optimist in most situations. I think he said something like, I'm an optimist because nothing else seems much of use or something. I'm not the best optimist. I tend to have kind of a mixed attitude about everything. So I'm learning and growing in that way. But optimism is kind of a choice too at times. Determined by your attitude. So anyways, I was thinking about that this morning as I started the stream because we kind of had in our minds yesterday on XRP. I haven't looked at XRP, so I don't know. I'd have to look at it. Kind of had in our mind yesterday that we might be going back down. I had thought that GME would make a bigger move up, and it did not. And AMC hasn't either, for that matter. So like, I don't know if we're just waiting for it or we're just not going to get it. What I mean to say is there was a apparent setup to go back and retest this trend, and it just hasn't happened. Now, interesting, because I guess if you kind of like step back from it, bird's eye view, and you're kind of looking at it and you're thinking about, well, what happens if it takes too long? Do we just not get it or what? And I kind of have I guess I'm of two minds about it. So there's always the chance that you're just not going to get it. That doesn't seem very likely in this case because we left a gap behind, and I know we've left gaps down below as well, but also because it would seem to me that we've already made the jump across. We're just missing like that push. So it could be that this was like a head fake, a distributive action. It went above the resistance and it's come all the way back down to near like the bottom of the range, which locally, which could signify to a lot of folks like, hey, we're going to sell because buyers didn't follow through with that action. So normally what you would expect here, if you have that push out and then that advancement, if this is an SOS, and it could have been, there really wasn't anything here to indicate that this was particularly bearish. I got to be straightforward about it. I'm not being bearish for the sake of being bearish. Like, I genuinely don't see anything here that made me feel bearish. This actually made a higher low when it came down on Tuesday, and then it pushed out and made another higher low. So there's really no need for, and then there's a double top here, which is fine, but there's no real there's no early push of resistance. There's no clear sign of weakness. It just kind of is what it is. Some people, if they see something like this, they're probably going to be thinking almost immediately like a bear flag. And I think that at the end of the day, like that's probably where you're going to have to hang your hat, because until it breaks out, you don't really have a lot to go off of. I use Wyckoff quite a bit, as you all know, and it's not perfect. There are times where you might think that you see something that looks like a Wyckoff setup or whatever. Wyckoff doesn't work very well on really small time frames. You can use it, but it's kind of unreliable because institutions don't trade on these kind of micro time frames. They just don't. So anything that you're looking at could give way to a much greater setup. And that's really important to kind of recognize that, like, yeah, I might see something that looks Wyckoffian, like, oh, this looks like an upthrust, or this looks like a spring or whatever. But if you're on like the 30-minute and below and you're looking at a very short 1 to 2 day range, no matter what it is, it's got to be thought of as just temporary anyways. You have to think about it as, well, even if this is bullish, it can't be by itself thought of as the big move, right? It's a day trade kind of move. It's an intraday kind of move. You do not give it more than it deserves in terms of credibility. So what you would do is then step back and look at the bigger picture. We were trying to do that very often on this stream. We're always trying to do that. And yesterday I was saying that usually what you see after this kind of a breakdown is a return to retest that uptrend. And that can look like either a hook, depending on the language that you want to use, where it's like hooking back up, like that J shape, or it could be referred to perhaps as a shoulder in this case, because it has that return to a very similar $5 mark. Given that it's a Thursday, you're kind of anticipating it's probably just setting up for Friday, right? And then when you look at this big picture, it's not really giving us a whole lot to go off of. On the price action, it did appear that it broke out, but I would suggest that it doesn't seem that way, or it's not obviously broken out, maybe on RSI perhaps, things like that don't really make a huge difference, but it could be something to consider. Like maybe it's like a false start type deal. Didn't really look at the short term yesterday, so I wasn't really looking for that. But suffice to say, we have in our minds that it's probably following to some degree. You see this pink line going up, that marker, and this is layered. So there's a lot of different pieces here. I've got a simpler chart that I'll show you right now. This was one that we just kind of built pretty fast just to kind of help define better maybe the directional momentum, I suppose, of these forms, because there was so much volatility, you get kind of lost and you don't really see where the actual trend is going sometimes, especially when it looks like it's basically just going sideways. This did have a nice uptrend to it, and it was holding it. You can see like the multiple points of contact with these uptrends. They're significant, and a lot of them were built right here on this first downward move that went into earnings. Most of these kind of cross sections were built there, where you're kind of getting a low and then you come back up and retest it as a high. And then that's eventually used in the parallel structure going up on the bottom from November 8th and the bottom on the 19th. Okay, so that's the generalized direction. And I've been back and forth about this because when we first came up, and I think I talked about it, it must have been, at this point, it must have been before this. I don't know how I don't know when this was, because this looks like the week of it must have been the 25th. That's right, because I did stream that Monday. So when we first came up, I was looking at this as a potential parallel structure, and I had drawn 2 markers. And we're looking back so that we can kind of get an idea of maybe what we might still be missing here. And that's why I'm talking about the past few days, past week, because I think we're still missing some pieces on this AMC chart. And I did address some of this yesterday, but I want to kind of hit it from a different angle today. So anyways, yeah, I hope you guys are doing well this morning. By the way, if you're just joining, welcome. I'm just going, as I do. So I'm not ignoring you if you're saying hi or whatever in the chat. I'm just talking. So when I look at this, I'm thinking about how on the 25th through the 26th, I had some expectation that this might come up to this top trend. It never made it there. It got to like 501 or something, and then it just kind of pittered out. I didn't look at it for the most part until this week. So I was off for about a week due to Thanksgiving break and spending time with family. I really just didn't check the charts very much, maybe once or twice here and there, just to see what was going on. It was mostly just sideways chop anyways until that Friday. So the first few days of the week were kind of sideways, and then we had a pop going into Friday into Monday. And yeah, and I would suppose that's just everybody kind of returning back to the office, kind of, so to speak, as a manner of speaking, I suppose. And anyways, we didn't make that push up above 5 with much strength, if at all, until that Friday. So one thing that was interesting was we didn't quite hit the top of this channel. And on that Monday, I had looked at this and said and suggested that what we probably would expect at this point is to go ahead and come back down and fill that gap. And part of the reason for that at this particular time, and this didn't happen, as you all are well aware, but part of the particular reason that I thought this might happen at this time was due to maybe a semi-symmetrical setup here. This would appear to me to be even though it's messy, there's a number of things you can kind of look at in the market that are just really messy. And sometimes, even if it's not like the proper structure, I think it's still worth taking a look at. And what I mean is that, let's say, for example, somebody said to you that there's a rising triangle, right? An ascending triangle pattern. And if you don't know what this pattern is, it's basically a pattern where it's kind of like a wedge, but instead of going upward or downward altogether, a rising or ascending triangle, as it's called, basically continually bonks its head on the same marks. And if it breaks out at the end, usually it's the 4th or 5th hit, because there's usually about 3 hits before traders enter one way or the other. And it can sometimes have like a mild reversal, before it does that. Sometimes it flushes down or breaks down first before it breaks out, and vice versa if it's breaking down. Sometimes it can head fake and come down the other way, which actually makes it a stronger move. We would look at something like this, and you would identify it rightly, and then you could do a trade on it, right? The same general principles do apply when it's not perfect. So like what I mean is that, let's say this is an ascending triangle and then you kind of tilt it upward. Well, like immediately you're going to say, well, it's an ascending wedge, right? It's not an ascending triangle, it's an ascending wedge, because the price action isn't hitting one particular resistance, it's hitting multiple ones as it's rising. But in theory, if you think about it, it does mean like, yeah, there's an advancement, but at the same time, there's also a resistance. So like you are advancing every time you push up, which is what we were doing right here for that whole week. You're gently advancing, you're raising up the resistance, but the resistance is still there. So it's not that, when you think about a wedge, I guess when I always kind of get confused about it is I think about it as this sort of husk. Like it doesn't actually have like a filling to it. It's just kind of this empty shell and you're just kind of filling it out. And then when you get to the end, something's supposed to happen. That's a bad way to do TA, because if you do it that way, then you're basically saying that there's no reason for it. It just happens, right? It's just a statistical anomaly. It just happens. Well, it doesn't just happen. It happens for reasons, right? And one of the things that you want to look at during those motions is you want to look at volume, you want to look at RSI, things like that, strength indexes. It doesn't have to be RSI, it could be other indicators. RSI is just an easier one to use because it's just there. It's one of the most commonly used ones. And it's really easy to see how that's basically the exact same pattern that we just talked about. It's just on a tilt. And ultimately, like, if you look at the volume, it was dropping. These peaks were dropping the whole time. And I'm pretty sure that RSI had been divergent anyways, bearish, slightly bearish divergence. It was on GME anyways since like mid-November. So there was a lot of downward pressure. Like, bulls were not looking as strong as a lot of people may have suggested. If you just looked at only the price, you probably thought that this looked really good, right? And you were like, oh, it's going to break out. It's about to fly. But if you look at anything else with the price, it doesn't really look too hot. It just didn't. And so going into this week, I didn't really expect there to be a breakout. And my thought is we never came back. Like I was saying a minute ago, we never came back and revisited this level. And we didn't do it on, the week of Thanksgiving. And instead we pushed up high, and you get this double flush reversal where you pump high and then immediately you drop back low, right? So now I'm essentially just giving you the same chart over on the side here, but like my expectation at this point would be what a lot of you might think, and that is, well, maybe, right, we need to come back up and retest this trend because we lost it. While that could be true, and it is often the case that we do a big upward flush, what's unique about it perhaps is if this takes a really long time, like this happens quite a bit on AMC, like maybe it doesn't even go there, or it tries to and it fails to advance, and so you get basically just like a breakdown. There's a lot of different thoughts about maybe what could be happening. If it doesn't immediately come back and retest this mark, I don't necessarily think in the greater sense of the term that it's inevitable that it has to come back. But especially in our case, we've got like a gap zone here as well. And so there's kind of like a institutional marker, if you will. I call them institutional because I don't think that retail fabricate, I genuinely think that's the manipulation part in some ways. It's psychological. It's also kind of, I hate to say it's like a Morse code or something for like a code breaking thing or something. It kind of is though. If you read up on even Wyckoff theory, and this was 100 years ago, he was looking at the way that they kind of signal each other through the price action, and it was obvious to him that was going on, and it still goes on, I think, but maybe in a misleading way at times, right? So it's a bit of a dangerous kind of mind game to try to do that. But I would say that genuinely, like most of the time, if there's a gap and a drop of a support, there's no reason to think there's no reason to get tinfoil hat about it. It is what it is. It's got a weakness to it. Like there's a check that hasn't happened, and there's a liquidity gap. Okay. Now I say the same thing going up as I do going down because I'm not going to be biased about it. And I said the same thing about this when we were talking about, oh, maybe we need to return back down to this gap at 458. I expressed the same thoughts. It's not about, again, that there is a gap necessarily by itself. It's also that we never went back and checked that creek. And I've been making that case for the last couple of days, perhaps to my own detriment, because I think a lot of people get kind of annoyed with the idea that AMC might have to come back down. But I've made the case because I genuinely don't see how anyone could look at this and say that that was checked. Just like I can genuinely sit here and look at this and say, yeah, this wasn't checked. Right? Now, does everything in the market have to be back tested and checked? No, but you shouldn't use like universals like it always has to do this, or it never does this, or it always does this, right? Because that's silly. Of course there's exceptions. And of course, when we look at something like an ETF or like a major stock like Tesla or something, you're going to go back and you're going to find places where, as just good examples, where that didn't happen, where there was no back test. And it's usually because of a disconnect in value. But we're not talking about that here. We're talking about literally like 30 cents. Okay? So I don't buy into the argument that when we talk about coming back down 30 cents, if it doesn't break anything, if it doesn't ultimately ruin the chart, there's not really any worry on my part about us getting stuck, as long as we don't get stuck, right? Like we get down there, we deal with it, then we come back out, we deal with it, right? And those are things that I think are really important as a trader, to just say, look, I'm not going to have my quote today, I'm not going to have a bad attitude about it just because we're doing a retracement. That's a choice. And if you thought that this was just going to take off and go and you didn't have any consideration for this backup, I don't really know what to say, except that I think that we really need to take a look at what it is that these are when we break out without testing a support, or if we break down without testing that resistance. Those are now markers that are very, like, they're sort of like holes, you know. I know I'm a very nerdy kind of guy, so I always say like rips in space-time or something. Like, obviously black holes don't actually, we know that now that black holes don't actually suck stuff in. That's not true. My son corrected me the other day when I said something like that too, and I was like, it was just an analogy, kid. And he was like, I know, but they don't actually suck stuff in. I'm like, yeah, I know, they don't, not really. Not the way that we think they do anyways. That they used to say they were like, you know, like a vacuum or something. But it's like a black hole, right? So there's like an empty void there that will be probably filled at some point. And it's not, again, it's a question of liquidity on one hand, but also support. If it were just liquidity and not support, I don't think I would care that much if we didn't come back down to like the 450s, 460s. So I feel like I'm kind of preaching to the choir here, where like most of you guys seem to know this and accept this. But there's like a handful of people that almost every stream come on and they just don't really understand or agree with that idea that things have to be back tested. I don't really know where that comes from, because it's sort of a universal principle in the market, because it's based on what's happening here, right? And what's happening here is that they're pushing against resistance, but it's weakening. You're getting less and less and less. That means it's being absorbed. Like, if you're putting in effort and it's not going as far, it's because the opposition is starting to put in more and more effort, right? And eventually, when you capitulate, the opposition, in this case, the bears, right, because we're going up, the opposition at 5 is going to dump it down. That's exactly what happens. And there's also this nature of like, your buyers are working against you too. You're not just playing against sellers in the market. You're playing against buyers, because, as well, if you're buying, because when they get to this point, guess what happens when this drops? I guarantee you a huge number of traders are going to have what's called a stop loss, and they're going to sell. They're going to flip sides. They're literally going to turncoat and decide to be sellers for a moment, because they're not interested in watching their profits wash away. And some people, again, don't really get that. And so they're like, I don't understand why we're backing up. It's like this weird conspiracy theory always to them. And I'm like, it's not a conspiracy. It's very simple. You know, if you think about supply and demand, it's really straightforward. You can't advance on weakness indefinitely. It just doesn't work. Now, you might look at this and say, that's not weak. That's not weak. There's a lot of volume in this push-up, but there's also a lot of volume in this action going up into 5. And volume going into a number but not advancing through it is actually a sign that there's a lot of sellers there, just like there are a lot of buyers there. If this volume were by itself, all buying, then this would be like a straight bar up. Prove me wrong, right? Like that's the nature of supply and demand. So if you have this kind of high volume push, but you're seeing a weakness and it's starting to narrow, the range is starting to narrow, and ultimately your volume is dropping, even if it's still elevated, which is the case here, you're going to have a pullback. So there's nowhere in my brain where I did not think at one moment coming back into this, and I have no problem sitting here telling you, because I feel like above board, like I did not think this was going to continue to advance. It's very unlikely. Does it happen sometimes? Yeah. Sometimes this becomes like an S-curve, and that rising wedge, as you see, it's usually the inverted, right? Usually you drop first, and then you go up and you break out. And that was what we were talking about with the ascending triangle. It's almost always the case that that's what happens, because they're dipping back to get the buyers, right? And as opposed to going up to get the sellers. When I say that I'm a contrarian trader, at times people might think that, oh, so you just trade crap stocks that don't do what you want. No, I think that what I'm looking for is I can see it pretty readily in the day-to-day price action. What I'm looking for is that kind of movement on the grander scale. That idea that we're going down, we're not going down indefinitely. We're not a falling knife. There's a difference, okay? Versus we're going down on apparent weakness. And there's actually an underlying strength. And that once that table turns and we're flipping the script, it's going to be a big rug pull for shorts or for sellers. That's kind of what I'm looking for. And I don't think that that's a bad way to trade, but you have to be very, very patient, because sometimes things don't work in the timeline that you think they're going to work. You may have been right about it. And ultimately, I mean, I'm not saying I'm not this guy, so do not compare me to him. But ultimately, that is what Roaring Kitty was doing. Deep effing value, right? He was looking at it as a contrarian. He was saying that there's an overhyped nature to the downside on this, and it really looks stronger than it actually is. And for every person that's right about that, there's probably 100 people that are wrong. So like, do not say, I'm not sitting here saying I'm this guy. I do not want to be this guy. That is not what I'm saying. But I am saying that like, that's kind of the same idea. So if you're wondering like, how does that jive with like this whole movement thing that everyone talks about? It's kind of the same idea. But I'm not looking at every single move on AMC like this has got to flip, or this has got to do this, or I've got to find the, it's not like that, because I'm looking at bigger picture stuff usually. So lately I've been looking at this, thinking about this 460 to 450 area. And I'm like, I don't know how else to sort of prove it except to think, just kind of argue about supply and demand. And also the fact that we were rising on the weakness here, it could have been one of those situations where it just obviously doesn't go. Now, what's interesting about this whole setup is that it did jump the creek. So like, you don't have just the interaction of, oh, will it come back up and retest 5, which seems apparent, or will it go down and retest 454, whatever it is, or 460s, which again, it seems pretty obvious that it could do that. There's both weakness here and weakness here at this point, meaning like there's clearly like a problem, right? Where this hasn't been checked and that hasn't been checked. It's not in a vacuum by itself, okay? This price action is also married with the idea of creeks. And the way I define creeks is a moving support and resistance, okay? It's a flexible thing. It may be at times like a trend. It may be at times like an EMA. It's a kind of a catch-all phrase to define a flexible moving resistance. It makes sense, and I know I'm on a Churchill spree here, but if you think about the battlefield and like pushing the line forward, it's not exactly like perfect, right? But it's flexible. And if you move the resistance here, for example, to the upside, which we did 3 times, 1, 2, 3 times since October, and then again, now going into November, December, this right here, this action is pushing against resistance. Well, where does that come from? Well, the resistance was down here, right? You can see very clearly supply is pushing it down. It was almost parabolic. Now, these first ones are so reactive that it pretty fast, it comes back above some of these resistances on the way down. But still, the major ones are not being pushed as much. And those are the ones that we're talking about like here. Like this was a big one. You can see like there's support on September 4th, somewhat of a support on the 23rd of September, but it flips. In between, we have the first rate cut, right, around the 16th or so. That 13th we've talked about quite a bit. It was a really critical moment for the stock market and for small caps all around. And then notice that after you break down, it immediately turns this level around 465, immediately turns into resistance. And I've been kind of on the argumentative side about this, saying like, I think this is really important because this is one of the most important, when we looked at our important figure, it was one of the most significant, if not the most significant, because of how often it was hit, resistance points, or support points, I should say, because it was a support up until lately. Okay, it was pushed, and there was weakness there, but it definitely was being acted upon as a support. So when I look at it now, what I see here visually, and we talked about it when it first came up, because remember I said I thought it needed to go to like 470s, and it only went to like 463. And I'm like, that's not enough. I was like, I don't know why it's low, but it's low. And this was what happened right before earnings. I was like, it's too low. Why? Because it didn't actually push the resistance at all. It just kind of touched it and backed up. That's not enough. But as soon as you get to that earnings and then after, you can see like right there, this would be considered like a raising of the creek. Now, it just so happens that if you draw this in like a perfect line, which I'm not going to be able to do perfectly, but if you did draw it, because I'm using an arc, in a perfect line, you'd probably see that it's fairly close to a perfect line. And that's one of the reasons I use these like cross trends a lot, because it almost always becomes like a signal marker again of where you might return if this loops back up. Just like we're talking about here. Where does it go if it loops back up? Probably this line, right? It's a bullish directional mark in some ways, even though it's being created in a downward bearish action. So then when we look at that, you can see like that line is currently being compromised, which means that we've pushed resistance and we're trying to push above it, but we're not holding it. And I would even argue right now, because this was raised again right here on the 13th of November, I would argue further that I don't think it's actually holding at all. I think we're below it again. And that the push on Friday really came from us being above it. And now we're kind of chopping below. Is that always a bad thing? No. It's just something to keep in mind. So you have a resistance now above you that maybe the bulls, I'm not positive, but maybe the bull operators do not want to break it too early. If they go up too soon, what's going to happen is they'll probably gap fill and then race back up to the top. Some of you guys are like, yes, please, I want that. I'm like, okay, that's fine. Here's the big issue I have with that, is that if you do that, what you've done is you've left behind, whether it's filled now or later, you've left behind this weakness. And my question is the cost of going down there greater than, is it going to essentially is the cost of going down there now going to be a better alternative than leaving it behind and the cost of coming back down there later? And maybe it doesn't matter, right? So we had a gentle discussion with JP about a few days ago about the nature of these pullbacks, and his argument was like, well, you've already traded down there. Why do you need to go back? And I'm like, I don't think it's that. I think that even if this were like a widening and a narrowing in some kind of a weird diamond formation and you broke out, you may still retrace all the way back down before leaving. That's just called a throwback, because again, if you didn't check it, that's fine. It's not a not a bearish action by itself. I think his concern was like, with just, again, there's no need for that because you've already built the support here. I don't think you have. Like, I think you've built liquidity, but it's largely been ignored as support. Like, I don't see any kind of pullback here for support. So on the one hand, it's like, yeah, kind of spinning my tires, talking about the same thing over and over. And you're like, well, it's the same exact argument. You're just going to go back down and make support and start going through the whole thing all over again. And I'm like, yeah, pretty much. But my question is it going to hurt? Is it going to hurt bulls to do that? We're already beneath what could be considered like the rising creek here. Okay, that doesn't mean we're going to keep dropping. It just means that technically we were already diving below the creek. And then if you look at the next ones up on the list, I think this one that comes back pretty low does stand out to me because, again, it was never tested. I don't think that it hurts us at all because ultimately I think that the main cross that happened has already happened, right? And we've talked about these green lines quite a bit. And just to give you like a heads up, I hadn't talked about it at all yesterday. I did mention the parallels a couple times. We were looking at a different chart most of the day. And this looks wonky, like they're not obviously like right, but I mean, may need to adjust that because that's really obnoxious. So I'm going to delete this. I'm not a big fan of like, if we can be perfect on these charts, we might as well be perfect on these charts. So I don't know why that's off. It may have been a time frame thing. Ever happened to you? Sometimes it happens to me. I'll put it on my chart and then I'll switch time frames and it's like, what? It's like completely wrong all of a sudden. I'm going to do that just to kind of like bracket out where it is. So this goes back pretty far. This goes back to some of the earliest trends that we have on AMC, coming down from 2015, hitting again in 2017. Really, this whole interaction down here wraps around this same kind of marker. It could be thought of as a creek if you want. I think about it maybe a little bit more like I use the term parallel because it's a parallel, but also think about it as a channel. It's the center mark of that channel, which would be like returning to the middle of a range, for example. And you can see like where we are now, it's clearly been interacting with that region quite a bit. So when I look at this, again, from like that heads up point of view on the big picture, the question is, have we already jumped that? And the answer is yeah. Yeah, we did. And honestly, I think the reason that this was so cruddy and choppy is because we were interacting with that middle and shaking out a lot of folks. We'll see. We'll see if it continues. And if it does, then this was a big shakeout to get those bears out. But I see it as that wave, right? This is the top of the wave. This is one of the first times we really like pushed away from it, and that's that quad flush. And then we do it again here, and we pushed above it. So if I'm looking at the big picture, I can kind of move these parallels around if I want. And what I did is I put this one down because they're just, again, it's like an acting fluid center. I put this one down to like the breakdown target on December 28th of 2023. And I just made another one that was a little tighter. So I did it like big picture and then I zoomed in. And what you find is that breakdown right here, December 29th, 2023, correlates to that September 13th and 16th area in 2024, which is where we ultimately like stopped and then started dropping away from it. Now, when you zoom in, you're given a clearer picture perhaps of, and I'll get rid of my choppy lines if you want, but you're given a clearer picture perhaps of where that might be. And that squishy middle, as I've been calling it, that area where you have, look at it, guys. Look at where the middle of that channel is, and just on my chart. I'm not a perfect person. I'm not, but I do make a good effort to try to make things as exact as possible. And just look at where that breakout is. It's literally on the center mark. It's the dotted line is the center mark of that massive channel that was built very carefully, using very specific points. And then when you look at these green markers, which again, they're more localized perhaps because they're being used, it's clearly being used as a channel. I mean, I hope you guys can visually see it. I visually see it, and it's just kind of hurtfully obvious almost. You can see the motions here on these movements are all kind of bracketed in this like macro channel, and you can see the motion on these waves and all the attempts that we've had to break out, and then even like the breakdowns are all defined by this kind of tight middle channel. So a lot of the creek that we see and perceive that we've had on this downward motion for like 6 months really comes from a macro view of AMC. And it is locally reinforced. Like there's another one here, this yellow guy that I drew. That wasn't a racial comment. It's just yellow. I just said yellow guy, and I was like, maybe I shouldn't have said that. You guys are like, what? No, I promise, it's not a racist thing. That's what a racist would say, Booksy. Jeez, man, just stop. All right, so this yellow line coming down was one of the ones that we used. And there was a few, right? But this is a reinforcing like trend that's basically saying, all right, we pushed up too high. Let's control the price action and bring it below here, right? Let's control the price a little bit more and try to drive it back down to get the proper breakdown away from where we know we can get a lot of sellers is right here off of 5 and that intersection with that greater middle. So when I look back at this, I don't think of this as a coincidence or something that's like, you know, a lot of people will say to me that they don't think that the stock is going to move unless it has certain criteria met and this and that. And I'm just like, look, I get it. I'm waiting for catalysts just like you are. I get that there's catalyst events like earnings or FOMC. But at the end of the day, like it's built into the chart almost always. And when I look at this, it's really hard for me to see this as not being built into the chart. Like the interactions that we're facing, and I'm going to get rid of these just for a minute so you can see what I'm talking about. But the interactions that we're facing are really pretty straightforward. You know, we don't need to have necessarily knowledge of the future to understand how to read the chart as it is right now. And right now, you can see pretty plainly that the interaction that we had on earnings, what it kind of looks like from this view is that at first we have this push down away from, like we keep closing beneath the creek. Remember how I kept saying that? I was like, we keep closing beneath the creek. This isn't good. This isn't good. This isn't good. Well, on the weekly we were not ever getting above this. You can see the interactions here on the 4 hour as I'm looking at it. And you can see very plainly, like this actually pushes not only the resistance that we were talking about from October 1st, which was around 470. It did push that, but it also pushed above this green line, right? And this green line hasn't been tested since September 9th. Big deal, right? Well, yeah, kind of. And then again, it's pushed again a few days later, right? On November 13th, it's pushed up and both of those are raised. And again, you're jumping that green marker. Notice that when they knock it down, in both cases, this becomes like the most critical mark right here. I'm going to draw a yellow arrow going through it. You can see that that head and shoulder right there is built off of, it's like a head and shoulder anyways. I see 1 push up, 2. It's built off of this mark. And just like the earnings drop is like literally closing above it. And we remember I said that I didn't really understand how that would have been perceived as a bearish signal because it technically bounced there and it closed above it. And I thought that was really confusing. And I still to this day think it was meant to be like some kind of a bull trap because it wouldn't have signaled anybody to sell. It actually bounced and held above, which was strange. But because it closed beneath that 50% marker repeatedly, I think it did, become very bearish. Notice that when we finally closed and we have this kind of strength push up away from this, I don't want to call it again, this squishy middle kind of green marker here, and the support being at 444, which I'm going to claim credit for because I did call out 444 when we came down here. I said I think 444 is going to be the level that we need to catch if we're going to go back up. It took a heck of a longer time than I thought it would, didn't it? Way longer. But I'm going to claim credit for that because I said that, and I think it's fair to me. I said it was going to hit 444 because of the interaction of 444 way back here. Weird, I know, but there was reasons for it at the time. After it hit 444, it pushes up to 456. It closes above that middle, and then immediately you get a gap up. And notice that the gap up, even though my lines aren't perfect, perhaps, and they could be a little bit off here and there, but I think they're close enough. Notice that the gap up ultimately pushes us above this top on the green marker, and we don't go back. So when I'm looking at this, a lot of folks, again, are kind of like concerned about this idea that we may have to come back down. I really think it's just an attitude thing about expectations, and maybe like you feel like financially you weren't ready for a drop, but really this could go back to the 460s, and you can even go back all the way down to this mark in the middle. It wouldn't kill us because technically, as you can see visually, this has not actually been confirmed as support. You're like, well, wasn't this support? It's a breakaway. gap, right? It's a huge volume and there's a breakaway gap, maybe. But there really is no way to know. Like, we can look at breakaways in the past. Some of them, they broke away, they didn't go back. One example is recently we broke away from that $3 area. We didn't go back right away. Okay, huge volume, huge amount of volume. We did the same thing in January, right, on the big markup in 2021. But for every one example that there's a breakaway, and there's only a few, there's really only a few on AMC anyways, there's dozens and dozens of examples where that didn't hold. And frankly, yeah, that's a big amount of volume locally, but when you zoom out, it's like nothing. In the grand scheme of things, it's not even, it's like average volume from back here, maybe around April 2024, this past year when we kind of pushed up above. It looks more like early move volume. And to that extent, I think you could probably even argue that maybe there's a correlation to some of the early push. Like this had an early jump. It had to develop like a bullish basing. Again, why do we need to go back down? Well, this is building strength coming back down here, repeatedly retesting the floor, after it made a jump. So it's like that same argument doesn't work if you go backwards. The idea like we shouldn't have to go back. Okay, well, we do it all the time, right? You need to build a support. So I'm like of the mind that if this is a breakout, and I think it is, because that's the way I read it right now, it is above the mark, it still would do well to come back to the 460s. So like, again, just reinforcing that idea that you have interactions here that are clearly and obviously saying that like, yes, we have broken out, but you also have interactions here that are saying we've kind of left some weakness on the table. We really haven't checked ever. And you can look back at this any way you want to look at it. The only argument you could make that there was ever really a support here, I mean, since it broke down in January of this year, it's almost weird how we're back to January again. And we're basically on that marker again, that middle marker right now. Like as if we wanted to return back to center, by that time. The only real time that's acted as a support, arguably, was maybe here, which was an after hours price action. And it hasn't since a year ago. So in the last 365 days, we've only really seen it maybe act as support once. So now let's ask the same question. Have we built enough support on that line for a bullish run? Not unless we're going to do something like we did here on like May 13th and have some crazy after hours move. But even this, guys, I don't know. I'm not going to look at extended hours right now. I'm not going to mess my chart up and try to fix it. But even this, just looking on the 4 hour, there's really no support here. Like, it didn't actually test this as support. When we came back down, we just bled right through it and chopped along it. And then almost immediately it became what? Supply. I don't think it's a coincidence that we hit this 570 area at the same time that we're hitting this kind of squishy middle pocket. It's not a coincidence. That doesn't exist in this world. Like, this is not an accident. It was brought down there because that has been acting as the center of a large range for a long time. Just like we were brought down to essentially the center of the top of that range when we pulled back after that big run up. We are basically doing, essentially we're just doing a channel. And right now we're kind of in the middle of that channel, deciding if we're going to have some kind of an up thrust before we come back through it, or if we're just going to dump through it and head back to the bottom of the channel, which is low. It's in the 2s. So it has to change direction, right? The market has to change direction in order to continue. One of the things that we talked about was that this push-up does go higher. It's an auto reaction, right, on this drop. It does go higher than this top, which is fine. It's not a bad thing. It didn't go too high. It didn't go way up above here, above 1380s. At least in regular trading hours, we see that it stayed around 1190. And I think that's good. It pushes up enough that you're saying, okay, we might be changing direction here because we just made a new high that we haven't hit in like a year or whatever. Now we got to go back down and find a support. It could be that like in some cases, that you're going to do what's called a Wyckoff-ian, bottom, phase B bottom with a spring, in which case, yeah, you might actually go lower to get support, which is weird because it seems kind of like, well, that's defeating the purpose, right? Yeah, kind of. But most of the time, what we would assume is that you're at least going to come back and build out a support here at 360s, right? Like that would have been an obvious guess. If you had seen this in a small scale and you saw that, oh, you built support here and then you pushed above and we're going to come back down, you'd want to have some support built above, probably above 360, or to go back and retest it, because that would be considered like a V reversal, right? Like a bounce, boom, boom, okay? It's kind of an even atom reversal too. I don't use that one as much as I do on some others, like it's on SPY a lot. But an Eve atom reversal chops sideways. It's called the Eve. Don't get too weird about it. And then the atom is like this, basically, I mean, it's essentially like a phallic move, I guess, where it comes up really high. And then oftentimes, in order to confirm this as a breakout, this is the unfortunate part of this bottom, you have to wait until it returns back above. And it can have like a handle, is what they call it. But you would have to wait till it returns back up, I think, above the atom top. It's actually quite a long-standing trend. It usually works pretty well in some cases. There's like a handle, almost like a cup and handle kind of deal right here, right? We're not even close to that right now. But we do have some similarities to it. And the idea of it coming back to retest a bottom, even if it's not a perfect even atom where you can't do like the measurement, this is fairly common in the market to have this kind of advancement that might push against a resistance and then come back and make either a high or low, and a retracement, or come back to this original support right before the big drop. The issue is that that's a one-off kind of thing. Like that does happen, but it's its own pattern. Unfortunately, there's also like a dozen other patterns you can use. One is like, again, like a phase B top that then develops into a huge range that takes a really long time, that could even have a spring. And like that's a different pattern for reversal. So some folks, I think, that were expecting to have like this explosive move back to like the 20s, they were probably looking at this like very simply, and I don't think it's wrong, I just wasn't looking at it this way, is that this could be an example of that kind of bottom where it may eventually come right back up, because you could technically just break out here, come back down, make a higher low, and then just advance, because you've already reversed the trend, so why not? Well, maybe, to that end, I would probably have to step back, and we're not going to go through this all like in heavy detail. Don't worry if you're already kind of like, why is he going off on this? To that end, I think the challenge would be kind of looking at how much we advanced and then thinking about retracement values, like where we might come back to later, would maybe be determined by even like a parallel structure. It'd still be pretty low. And then you could look at Fibonacci retracements. I'm positive that we're not in a bad spot right now. We're probably around that golden pocket, and we are. And I think the top of the golden pocket is like 430s. So, I mean, it's a good place to be if you're going to just retrace and then potentially bounce. There's nothing wrong with that. But, we've also seen historically that AMC likes to go deep for those retracements. The 332 is the top of the gap, basically. I mean, it's essentially where we broke out of the creek down here. And then the 297 is very obviously like right around where we jumped, which I think was like right about that same point, like 292 or something. That's the 854. So what do you want, Booksy? I don't particularly care about that. What I'm saying is like, because I've already talked about the nature of like how I think it could come back down, and it might come back to fill that gap. I've got it on my chart right here. What I'm saying is that the interactions that we see to get there probably happen around this squishy middle, and that's what we're seeing. And so we shouldn't be like surprised if we're going to go back and check it before going up, or if we're going to go back and check it on the downside before going down. It's kind of one of the anchors of this whole trend, right? Of this whole structure is like right here. It's very significant, I don't know if folks are giving it, if we're not giving it enough significance, or if we're giving it too much, maybe at different times, but like, It's been super significant. Like, this is a big deal. There was a lot of bear talk, and I even did a bearish stream because I was like, if it's an LSPY, here's what it would look like. And we did it. We went and they looked at it. Why did I do that? Because I think it's a responsible thing to do. I didn't do it because I was bearish. And I've already said enough about that. I've said that I will sit here and tell you I was wrong if it doesn't ever come back up again, because that would be ethical for me to do, because I've been very much of the opinion that this could be a very bullish setup for a potential secondary push. Now, the problem isn't that. The problem is, for me, it's like, how high does it go? And I think there's a lot of speculation. We've been adjusting our targets and all that jazz, and I made a case yesterday that actually coming back down to get to this retracement at the 460s is in our best interest. Even if the gap doesn't fill, and it doesn't necessarily have to, it is in our best interest because we've made an advancement at this point. I'm going to make 2 gold bars here. I'm going to keep it very simple. We've made an advancement at this point above this top here. So the bottom there, again, this little range pocket between 460s and 5, maybe 510, we've now advanced above that top. Now would be the perfect time to come back and say, we're not going to go low again. We're going to hold that support. And it's perfect for a number of reasons. A, that weakness that I talked about down bottom. B, because even if you didn't fill the gap, or if you did, it doesn't really make a huge difference in my opinion, because I think that either way you'd be hitting a strong support. Like, we haven't checked this dotted line, like I mentioned a few minutes ago, versus the green one that I have drawn out, which is technically more like 460s. Either way, like, that is really good. Like, I just talked about that. We have not done that. We have not made that check at all here for at least a year. And I'm gonna say that I don't think, aside from that push-up that we had, the second push-up that we had in May, I don't think we've had this as support since December of last year. That's a long time to avoid that as support and to keep it as a resistance. That's been like, if I were a bear, I'd be looking at that as like, that's the line we don't want them to cross. What happens when they cross the line is you get an explosive 100% after hours move. Now you might say, well, that didn't happen here. It didn't happen here. Kind of did. You remember when we came up on the 6th and 7th and that roaring kitty tweet happened? I don't know if he knew this, and I don't really care at this point, but he did it right here, right at the top of that marker. He did it. And this in after hours went way higher, right? Almost like it was trying to like explode out again, and then it was shut down. And it became a very controlled action from that point forward. And even the second attempt, remember we talked about the weakness? I didn't have this on the chart at the time, but I knew it was an important zone for other reasons, because this had been set up to the upside as a potential place to break down, right? Based on this early trajectories, we knew that this was going to be significant. I called it a danger zone, right, at the time. But even looking back on it, look at where that is in relation to where this kind of squishy middle is. It's clear to me, even if it's not always 100% obvious in every single day-to-day action, it is very clear to me on the big picture that this is super significant, right? And so I don't think about it as an accident or like there has to be some kind of perfect news scenario. I think about it as a very technical setup that makes a lot of sense. You don't need to have a lot of frills to it. And it seems pretty obvious to me that if we were to go back and check that level, we would be in a much stronger place, a place that we haven't even been at, again, for over a year. So I made some, tried to make some like semi-convincing arguments, I suppose, that we needed to come back. I'm not positive that is going to happen. Now, you might be thinking like, well, look, maybe you agree with me and you think, look, Booksy, I don't disagree. I think that it's probable. It looks like it would be stronger. But at the same time, why can't we just run and deal with it later? And I'll tell you this. When we were looking at, because I don't 100% disagree with that. You might think that I'm like, no, we have to do this. Again, that's silly to talk like that, because that's not true. For me to say it has to do this would be silly. It doesn't have to do anything. If it does do it, I'm not worried. That's what I'm saying. I'm not going to sit here and moan and begroan because moan and bemoan because it came back and tested a very critical level that it hasn't checked in over a year. You know what I mean? Like really substantially checked in over a year. That would not be a big deal to me. As a bull, I think it's preferable. It shows that bulls are interested in building a support here. It shows that they care to test the liquidity low. It shows that they're not afraid of sellers taking it down lower. It shows strength. It shows stopping power. All of those things are good for advancing a bullish cause. If we were to run without doing that, here's what it tells me. It tells me that they're interested, at least for now, perhaps, in trapping some shorts. It may be that they don't really want to go back down and let maybe some of those shorts get out. They may need that momentum or want to use that momentum. But ultimately, I got to be honest with you guys, what that signals to me is more likelihood for bear side later. It's not that complicated. It's very similar to what we've been talking about back here at $3. You can leave supports behind. You can just decide not to check them. But historically, like, this has never worked well for us. Ever. You cannot make an argument that it has. You cannot debate it. I'm being genuine about it. I know I've said, like, don't use universals, but there is no argument for it. Like, I've tried to go back and look at arguments that people may say, like, wow, why can't we just go up and up and up? You just can't do it. And on AMC, like, there's just never a situation where leaving that behind works out for us. Like, here's a good example, okay? This is a great example. This has happened recently. This looks very similar to what we see even right now, right? Remember this? You guys are like, yeah, I remember this. You talk about it all the time. You whine about it, Booksy. You're a big baby. You talk about how you got kicked out of your Discord group. Boo-hoo. So sad. Yeah, I know. Sometimes I am a big baby. I'm very sensitive. All right? I care about things. But notice that, like, this motion right here is fairly similar. Okay? But I want to just kind of point out that this was never really tested either. This is just an example of something that, like, again, I know you could kind of draw the conclusion that they're one-to-one. You could try to do that. I'm not trying to do that right now. I'm just giving you an example of a very similar situation. This has a big pop, comes back, checks our little trend line, and then it has what's called a UTAD, or a UT, if you think that it's late in the range or early in the range, maybe you call it a UT. Doesn't really matter. Basically, this goes up to redistribute along the top before dropping below. Well, how did you know it was going to do that? Well, at the time, I wasn't really sure. I didn't know. I thought it could be a V-shaped bottom. I knew that when the window had passed, and if you were with me at that time, this was a year and some months ago, you probably remember me saying something like, it's not good because of like 1088 or something like that. It kept jumping up above the top and closing beneath it. And I was frustrated by the price action because I thought, just reliving these old memories, I guess, for some reason. I thought it was going to do a head and shoulder. And so I had entered a trade low here, thinking that I was just swing trading. I mean, just genuinely thinking it was going to come back to like 1070s, 1075. I remember it was like 1075 or something like that. And I was like, oh, it's going to come back up. It did do this. It did not do it in regular trading hours. And I was ticked off because when it opened, it was like way down here. And I was like, well, thanks for nothing, you know? I was really frustrated because I shouldn't have done that going into earnings. I thought we would get part of the pop during regular trading hours, and then we would come back down. But at this point, I'd already been talking about 6 because it had already set up. I didn't know anything about dilution, didn't give a squat, didn't think if that was going to happen right away. A lot of people were like already expecting that, obviously. Frankly, I'm not sure if I was just being dumb or not paying attention, but I didn't expect that. I just knew that this was bearish as a top, and it was probably going to come back down to do what? Well, at the end of the day, it's probably going to come back down to this creek because it didn't really check it very much. And if it loses momentum, where is it going to come back to? It's going to come back to the last known bear supply, right? Like supply zone was down here. This is where people were buying and selling, buying up, All right, we're going to come back down. Why does that have to be that low? All I can tell you is look at where it goes. Why was it positioned that way? You tell me. This is destiny. You're saying that it's predetermined? I don't know. Maybe it wouldn't have happened if you hadn't diluted, but somebody knew going up here that it was weak because they obviously illustrated it as a weakness. So here's the problem with not testing things, right? You don't have an adequate test here, so you have this breakaway. You do get kind of the rebound off this when it does find support, but if it's not strong, then ultimately what you're doing is you're going to do a walk down, and I've talked about these 50-50 things quite a bit on this channel, but usually this is the case. There's usually a very simple mathematical 50-50 marker that is met, and you can see where it is here. It's on the SOS. So what are you trying to say, man? I'm saying that even if this wasn't predetermined, and I don't necessarily think it was, I think that there's a very simple way to understand the logic of the market in terms of wave analysis, because these things are already pre-built. Like, they're there in the beginning. We have this stuff right now, and we don't need to ignore it. You can look at it and say, I don't necessarily think that's going to happen, which is something I've done. Like when I talk about a dollar the other day, I'm like, I don't necessarily think it's going to happen, but it's there. And there are plenty of upside targets as well that you're like, hey, look, this could go here, but it doesn't happen. And a simpler trading strategy, obviously, here would have been to just kind of look at this as like, well, it didn't hold this trend, or whatever. Yeah, I mean, there's nothing wrong with that either. These are all working together. But my point is that these kind of lines should not be ignored. And the fact that this was not tested, I think, is just evidence of, hey, is this below the 50%? Yeah, it is. That means if this drops, it's going to drop below 50% to get back here again. Unfortunately, if it doesn't hold at 874, it's done. Like that would have been the stop loss. It's like can't go below there. And I think there was another obvious way to understand that too. With I think it was this trend right here would have been the same spot. All of it points to like this little location, and if you drop that, you're done. This ain't going anywhere. But it wouldn't have even mattered from a Wyckoff perspective. This had already pushed over the top. It doesn't make any sense unless you think it's a phase B top. It already looks like a distribution. It looks distributive. And it came all the way back to the bottom and made a new low. Like, it was already gone. It was long gone, So as we look forward, it's really hard for me to sit here and judge this chart without taking those things into consideration. I'm not going to make a bear case every single day. I'm really not. But what I am saying is that my general idea has been much like this the whole time. Like, I really didn't think it was going to go and just keep going. I genuinely felt like it's probably going to go up. Maybe it hits the 8s. You already know this, right? Broken record Booksy. That's what you could call me. And then it drops back low. Okay. So Booksy's doing the same exact thing he does every day. Great. Why am I even tuning in? I think it's just looking at it from a different perspective almost every day really helps, because we're taking different charting methods as best we can and trying to apply it as best we can. And by the way, I think on the 4-hour, one of your moving averages is at 460. So if you're looking for another confirmation that we may need to go back, I believe it's the 4-hour 180. I think it's right at 460 right now. We jumped over it. So it would be a back test of the 4-hour 180 moving average, exponential moving average, which is another piece of evidence that it might need to come back there. But if it doesn't, then you should be looking at this as if you were looking at any of these setups, right? And you would be judging it based on essentially the same criteria. And I think it's wise to do that. I don't think it's a bad thing to do. So if it didn't check this, I'd be concerned. I would be. I would be very concerned about a potential slide later, because you don't really have much building of anything here at this point. So there it is. I mean, like, I just doodled it. It basically goes to the same place I already kind of mapped for other reasons. You say whatever you want to say about it, but it's there. Like, that's a problem. If we don't come back down and check it, it's going to present an issue later, because you've got this massive resistance, right? And then you're just leaving it behind. And much like what we see in this time period, I don't necessarily know if this is where the 50-50 is going to be, but I think we've argued enough that it could be right there because we've talked about it being at 5. The reason we talked about it being at 5 is because I think that's basically where they've lifted the liquid center from 485 to 5, and that they're going to use that as an anchor for a double flush. This is part of the reason why I picked out 869 was because of this triangulation that happened up here. Before I started looking at possible lower targets like 6, I was like, 869 is a potentially really strong target because you can 50-50 through this massive waveform, which we've seen in the past is used. It's objectively the part of the use that was done in 2020 on that second push-up. It's quite frequently used, right? That there's kind of like a middle anchor. Well, look where that is in relation to where we are now, and we're building out much the same way that we built out maybe on this breakout or whatever you want to call it, okay? It's usually a marker. So great, we can get above 5, we might just run. We get above up here to 520s, we may just be in takeoff mode. But you have to understand that recourse is going to be ugly. Like coming back down to 5 now gives you a huge amount of leeway, at least to the 430s again, because you'd come back to this creek. But I think it's probable and very likely that it goes well below that, which is where I think a lot of people are kind of like, for lack of a better word, kind of like some PTSD about it, because we're like, we've already dealt with this kind of sell-off forever. Why are we talking about it again? It's a warning, because if it doesn't do what it needs to do now and check that 460, it's leaving that open for much the same way that we leave open a lot of times these creeks, right? I'm curious where this line goes. I'm going to extend it. That's interesting. Excuse me. So this actually becomes like the same marker that is used to kind of anchor all of this. It's all built around this one trend in the very beginning. This is how important wave resistances are to the future of the market. This one month period back here defines 1, 2, 3, 4, 5, whatever it is, 5 or 6 months of trading action that's to come. It's probable that this goes backwards to something else. Like this is anchored on something else in the past. I'm not going to go backwards and look at it. It's very likely anchored on something else. But it's amazing how you could pick up on that and just take note of that, and it would have helped you trade for 5 months. Like a simple couple week period of tops can help for months and months and months. Because it's defining where the supply is pushing. It's pretty evident. So let's look at this that way and take into consideration what I just said, and then take into consideration what happened back here and what could be the case for us. Unfortunately, as much as I don't want this to happen, it is there, and I don't think you should ignore it, is this line right here, which I'm trying to move. My mouse is flipping out. If you saw me flickering the mouse around, that was why. I would say it's probable that it was being developed when we first hit in January, which would have been in a year, and then it was ultimately broken here in May. And it looks pretty close to right. So it's probably right there. I don't know if I go any further back, maybe this one. That's a tough one because there's a lot of little markers on it, and I don't want to just pick one and then have it be way off. But I think that would be a comparable marker, right? If you look at the structure down here, which direction are we kind of going? What was used finally as supply? It's that line right here that goes above the May build out, right? And this is ultimately where we've anchored the supply. Well, that goes really low, Booksy. I don't want to go down that far. I don't want to go that far either. Excuse me, man. I'm dying here. But I think that I'm going to just take a sip of my coffee. Yeah, it is moving. I see it. That's to be expected. I'm kind of surprised that GME is going the opposite way. It is really going the opposite way. It is not going back up to test this breakdown. Maybe it's a little late to the party, or maybe it's because of earnings. I don't know. But It's the same principle. It's really the same idea that it would come back up and check this level, and it just is not. And by the way, charge point's up like 20% today for those that are in it. Congratulations. I did buy off the bottom. It didn't quite hit earnings. It like missed on EPS, but it's up 19.26%. I think it's probably about where it was going to go. You can see like it's at that red marker here. That's the cat ear cross. It needs to come back and build out support. And frankly, the support is really low because the FASB bottom would be like 123. I'm not going to tell anybody to sit and sell or something like that. That would be silly. It's got a lot of volume. It looks like it's squeezing a bit. But in theory, it would be better for it to come back down and build out a support around 130, because if this is a spring, which is kind of where I was at with it, like it could be a spring action, then it needs to come back and have what's called a test. And once it meets that test, then it really springboards and it should be rocketing like really far. Like the next marker up, if it can build out a bottom here between 150 and 120, the next marker up is really far. Like I genuinely think it's probably going to go all the way up to like the 3.5s, depends on how fast it goes. I guess if it just bleeds up right now, it may not get much past 3 by the end of December, but big moves. Okay. Big moves. Anyways, yeah, so AMC's up 2.24%. GME's down 1.81%, a little weak. This looks right to me. It looks like it's going back to test that level. I switched charts if you're wondering why I'm on a different chart all of a sudden. This was the first chart I was using today. Again, it's about right. That's where the gap is. So we talked about that first thing in the stream, like it's probably going to come back to 5 because it left a weakness there, and it did. If it breaks above 510 and it builds out a support above 510 going into the weekend, I think you have a very good chance that Monday is going to be it's going to be moving significantly. However, this is also the place where you might see a potential shoulder form. So the volume looks pretty weak right now. I'm sorry, it just does. It's moving up, but look at the volume compared to the left side volume on the shoulder. You may not be able to see it very easily on my chart because my doodles and junk, but it looks weaker. So we'll see. Okay? Don't put the cart ahead of the horse just yet. Let's just wait, because there's also a couple other trends. I got a red one right here that's working through. That's the cross trend from the beginning. So that was the same one that we kind of rejected against. If we're going to head and shoulder, it would be off of that guy right here, which is why I've got the marker there. Okay? So unless we get above that and then build out some kind of an SOS around 520 down to 510, I would not suggest to you that it's going. I think it's just a nice little pop, an opportunity maybe if you want it, but I don't think it's a breakout by any means yet. It's just not. So sorry, not sorry kind of thing, right? If it's going to shoulder, this is where it's going to do it. So it's a danger zone. Man, this guy can't just let good things be good. It's an attitude thing, right? Like, I'm happy it's going up. I don't mind it going up, but I'm also going to be realistic about it. And I know our enemy well enough at this point to know that they're not interested in running it unless they, if you can tell what the smart money buy-in is what I'm trying to say. So if it continues and we get the push up, I will confirm and say, yep, I think it's going to go. And I do think genuinely, I would have no reason to expect this to drop if it closes above here going into Monday. It would probably just have maybe even a huge gap up, to be honest. I mean, it could be like that. I really do think that's more probable. But until that happens, I don't know why anyone would look at this with anything but questions, because it's kind of hitting this supply zone again with mild volume. Okay? So let's just wait and see. I'll get excited when it's time to get excited. So what was I saying? I don't even know. Who cares, Booksy? No, you should care, because this is, again, this is kind of a defining feature for AMC of its price movement, is oftentimes we get these build outs and then they don't pan out the way we think they're going to pan out because we haven't adequately built any real supports, There's other places here that I think this is like a parallel structure. I'm not trying to like weasel it in, but it does look to me like there's a bit of a parallel structure here. So I'm thinking like right here. I can't quite match it perfectly, but it's close enough that I would say there's another one right there. Right. This area is quite large, like it's a big range. It goes from February 5th all the way up through maybe February 29th. And I think that would be a good place, maybe not that high, maybe right here, because there's actually 1, 2, 3 hits, and then this is like an SOW right there, or a test anyways. There. So we're doing this because we're kind of doing what we did, but we would do what we did back here, which is if you look at the way these kind of build out, if you don't build the right supports, if you leave it behind and then you have to come back later, it will return, you know. It will have that return energy, so to speak, back towards that original trend. So I think this is probably it, and it looks right. And it's not anything brand new. It just kind of goes like a 260. I don't think that's a bit precise, but maybe too precise. But it looks like 265, right? With a potential drop lower. And I mean, when we go and we look at the history of AMC in this regard, and you go back and look at where that original gap was, it's the same place the gap is at by right now as well. So if you're wondering about these green parallels, it's the same spot. It's right here on April 17th, 2020. That's the same exact spot we have the gap up here in terms of the parallel, right? I know it's not the same price, but that parallel is the same. This never comes back below it, that parallel. So in 2020, going into 2021, yeah, it makes a new low, but it ultimately like just barely does, right? It barely does. It doesn't ever come back below this parallel. So we might be okay to conclude something similar here. Like there's a parallel, there it is again. That's where the gap up is, same marker. I was just talking about that. There's definitely a chance based on what we're seeing that the gap fills and bounces out, yada, yada, yada. But you wouldn't necessarily expect it to come back beneath this parallel. However, notice that these trajectories right now, as they're pointing down, though they may not be met perfectly, they do go really low. Like this is an intersection at 205. Some of you guys, we talk about Stockfather sometimes here because I respect him, and he said the PNF's at 2. You know, I don't think it's unreasonable. I really don't. Based on the way this is built, it definitely seems possible. Well, what about this upward movement? What about it, you know? If we take this down and you look at where this is, again, this is 205. This is the intersection. Where is the middle here? It's at $5 from the top to the bottom. The proof's in the TA, you know, like it's there. It's the same kind of setup as this from back here. If you're looking at where that breakdown is, all that jazz, okay? It doesn't have to make it there. That doesn't mean it's like inevitable. It just means that it seems more probable. Like it seems probable. This is by what? May of next year, which falls in line with what we've been talking about because this isn't expected to break out until May. What do you mean, Booksy? I mean is that exactly what I was saying. Like this is way off. I don't know why this is way up here, but it should be like there. I don't know why it's up there. This should be matching this other side, but here, I'll just redo it because I don't know why that's there. What I mean is that the breakdown spot where this first traveled through really the floor. And I mean, it's kind of crazy how this is set up to where you see these other parallels going up. They're matching where it needs to be at that time. It's triangulating. The bulls are going that direction. But it's the same setup that we had in 2020, right? It's the exact same. Like, and bulls were going that direction. Like, they were heading up towards that top. You know, I'm not drawing out every single line on here, but what's significant about it to me is the constant nature of it. Like, it's a very simple chart. It goes from May to May. It goes from, like, basically this May or early June to May date to like June to May date. It's a 2-year cycle almost exactly. And then even at the end, the build out for this is essentially like 1-to-1. Like if you look at the distance traveled at the end, once it hits the top versus this part, it's not very creative, is it? It's like really simple. I'm using the same methodology right now, and I even used a very similar marking because it's a wave that gets from underneath this trend to above it. And that's like the big thing. It's like the comparison to 2020 is not just academic. Oh, it's fun because it's symmetrical or whatever. Who cares, all right? What matters is that this breakdown, right, actually keeps us underneath this like orange line that you see and this white line that you see. These are part of that parallel going down. Like a big picture wise, that's like a huge channel going down that we were kind of stuck in, right? So this pins us, this walk down right here is like an effort to pin us underneath that. Once it does, it just tanks all the way to the bottom. I don't think, again, coincidence-wise is not really a thing here. You really haven't moved basically directly down, irrespective of what happened in March. Who knows why that was there, right? Good grief. This is clearly being like pinned beneath. This is a distributive action above it, and then this is a hook that drops us all the way to the bottom of the channel. But notice that when we leave, it's inverted, and you do come back to the same horizontal, but now, right? Now, look at where we check when we come back out. We bust way high, go way too high, right? We've talked about this. We come back down, but notice like this is the test right here that ultimately like takes it all back to the top. Is right there on that top intersection. And then you're basically just building out until you break out. The setup is essentially identical right now. And this is what I've been kind of getting at for a while, but I think that I keep coming back to it because it's really important to remember, like, the timing of this isn't quite there yet. Now, the wave itself, I think, could be debatable, like in terms of how far it needs to go, whether or not it's the same distance, so on and so forth. Is it a 2-year cycle? Is it longer? It could be longer. I don't know. It's possible. Based on where this is, like, there's some differences. You can see like the build out doesn't look quite the same because of the location of like where this top is, the orange. It kind of demands like different interpretation. You might have to take this up to this top and suggest that that's really where it needs to go by that date over here in the future, so on and so forth. That's just a 1-to-1 comparison, like literal 1-to-1. Like if you took the exact same chart line and baked it out, that's what it would look like. Okay. I don't necessarily think it's going to be perfectly 1-to-1. So I've kind of used some different methods to the best of my knowledge to get it to a place where I think, yeah, it's probably right. It's tricky, No one's going to sit here and say it's not tricky, but the timing of it is like pretty simple. I think it's fairly straightforward on the whole. It's not very complex. It doesn't look like it's made to run until late summer. So if we were looking at this, again, regardless of like your personal viewpoints about the stock itself, whether you're looking at it from a helicopter view or just short term, most things seem to indicate that there's no real big run until mid to late 2025. And then guess what? The good news is that on the macro, as we know, and I know we're at 511. I'm going to go look in just a second. I'm not ignoring the price, I promise. It's nice to see AMC green and above a target price, which is good. But when we look at the macro, we're really looking at, again, like this ultimate goal of probably getting up here around February of 2026. And I think that that's still reasonable, I think it's very reasonable to say that we can come back up to the 60s, 80s around the February markup based on a number of other things like giant waveforms. And when you use the build out from the 2021 run and you use it in the correct place, it gets you to where you want to go, like at that time. So you can take that forward if you want to here, or wherever you think it's going to stop. And it does what it says it's going to do. This is beneath, just like the other one. This is like beneath the bottom. This is like above the bottom. Granted, the difference is that the timing here is like compressed compared to the timing here. It's not the same amount of time. So you'd have to make that adjustment here. It's actually not, would not be as long. It's more like this. So late 2025 going into February of 2026, which is ultimately like where a lot of those wave intersections go coming back up. It's the same concept we're talking about on the micro, which is coming back to kind of explore the hook value right here. It could be quite high, could be up in the 80s, you know, in the end. I don't know. It's not going to be like perfect, but you get the point. Okay. We're going to look at the local price action, don't worry. So I'm saying this just to demonstrate that even when I was talking about like 1380s, and again, you're like, I thought you said you were going to get to the point. Well, even when I was talking about like 1380, which is really high, I don't necessarily think it needs to go that high anymore. We've talked about why. But even when we were talking about that, there was this kind of idea that it may be the whole reason you do that is to kind of do a double flush beneath this wave, because that's what happened in 2020. So it's a secondary upthrust motion, kind of like what happened over here, right? Like at the end of the day, you could have made that an S-curve. We're at 510 right now. We'll see if we're going to hold above 510, go to 520s. You could have just made an S-curve right here and come down back to the floor. But instead, what they do is they take it up again. It actually goes higher, and it creates a larger S-curve that pins it underneath here. This is a distributive style move because then it ultimately takes it lower than the bottom and it builds out a low base as opposed to a spring. We don't need to do that. We don't need it to go this high in order to go significantly lower necessarily. Okay? So that argument falls a little flat there unless you're just long-term bearish and you think this is going to somehow keep happening the same way forever until it's like zero. That's not my argument. Okay? I don't think it's setting up that way either, by the way. I think it's setting up in a particular way that makes me think that it's probable and likely that we do come back down, but ultimately, like, I don't think that the goal is to come this low. It's probably to come to this next level up here, which is right around $2. Okay, so I haven't looked at the short term in a minute, so let's go look at the short term. So what needs to happen is it needs to pop up above here and make a higher high, and then it needs to build out like an SOS. A good example of something like this is actually the May to June run up. So I'll do a side-by-side if I can. This is my archival brain at work. So if you're like, what are you talking about? I don't know if I'll be able to get it, but I'm going to try anyways. So what I'm going to do is clear this chart. Let's just do a... no, I don't want to do that because I'm going to have to draw again on it. So... No, you don't, Books. You don't have to draw anything. Look at all those boxes of things that you've drawn in the past. You don't even use them anymore. The reason I'm talking about the May to June run-up is a similar move right here on this top. After it broke out, it did a very similar push, and then it pulls back and does this little M cross and then runs up. It's a good one to look at. I think March did the same thing, but March's is, we were expecting that to happen way back here. Remember, we did a similar build out, but then it didn't end up working out. So it doesn't always happen to be, you know, market doesn't always move the way you want it to move. You can do like a thing on here where you like go to, but I always forget how to do it. Whatever. If it's going to show me anything, it may be on the 30 minutes, but I'm thinking it might dinosaur me or whatever happens. We got time to click and drag. All right, we're there. I just got to find the right spot. There it is. Oh, that looks familiar. Yeah, a little bit. It's very similar. It's not like one-to-one, but it's similar. The reason this one comes to mind is because there's a buy-in and then there's a push-up, and that push-up is met with a pretty simple to read M cross on the bottom. And I believe that this is one of the more challenging ones to do because it doesn't, there's a little bit of a difference because it didn't push high at the top here like it did here, but it is like a 4-top. Might be easier to use, sometimes easier to use the RSI. Yeah, because you can see on the RSI, it actually looks more similar, in my opinion, because there's a middle, see that head and shoulder look on the RSI, and the same thing happened right here. It's like in the middle of the move before it actually reaches the high. This pushed up. So you guys are like, so it's going to go? I think it might be doing something like that. You know, we've talked about it quite a bit. We've already kind of had those expectations that it might run for a little while. But let's take a look at these last known trajectories here, and let's just analyze it as if we were looking at this brand new. I don't know if I would have done that. Maybe this one. Yeah, it's a bit odd. It's a weird setup here. I would have looked at probably this cat ear cross here. I'm looking up at the top. It does match the bottom, but I don't think that's what I would have looked at this right here because this is where it found support before it pushed up again. So we'll do something similar right there. I'm pretty sure it's already in the chart. It's like right there, maybe. Really, I would have put it here. But I guess there's 2 spots. That doesn't look like anything was ever checked or hit. It just kind of moved above it. It has to be off of that top because that's the RSI peak right there. It's the first big push. It's the little cat ear beneath it, so it would be the same exact spot. This is sort of like an algorithmic comparison, not really looking at, or just price action behavior if you want. Not really looking at it any other way right now. But yeah, this is it right here. So you would have had that push up. That's the breakdown. And actually, that looks like it happens after. No, that's right. That's where it diverts. It's on that push. It's the same push. We got it right. So the question then is, like, where did it find support? There's only 2 spots. We've already got the first one on the chart. Don't really need that. We don't really need this right now either. Let's try to clean this up a bit. Moving averages are below us on the 30-minute. That's fine. That's just confirmation that it's still uptrending. They held right there. That was a 30-minute 90 EMA, and it was holding. Didn't break. That's the next one right there. I guess there's not really a good one. I mean, that kind of hits like right on the nose, but it's hard to tell. It really looks like it should have been here. But whatever. It's out. I'm more concerned about the uptrend, I guess. So let's get rid of this. And let's see if we can find that. So this has an initial prelim support, or prelim supply rather, right here. It never goes back to it. This is huge by comparison. Huge. It doesn't even make sense. So we're not going to use that same exact marker. It's not going to be possible. Maybe this one. Maybe. I don't know, man. I'm not seeing a lot of the same support markers hit. Most important would have been just crossing this horizontal on the drop zone. So should at least include that. That was where the weakness was. That was the gap zone. It's right here. The volume's picked up a bit, which is good. I mentioned earlier it didn't look too hot because it was really low volume at first. You got to just kind of wait and see. I think this is a good one to use, and then we'll see if that plays out on the top as well. We never got a, no, this is just, it's just different. This is more parabolic. Sort of a turn up on like this hook. Okay, what else? Same parallel is used there on the cross. I'm looking at the wave structure. It may seem like I'm just drawing random lines, but I'm really watching to see that wave coming up and where it jumped. This is kind of the resistance that's being formed going down. It is the resistance form going down. There's two. One's here. The other one's a little steeper. And this is where the creek cross comes in, like the jump, first jump, right? We already deleted that line. I had it on the chart a minute ago. It's pretty steep. Once you jump over it, unless you break down, it's kind of irrelevant. So unless we break down and we come back, it's not going to be important. Not yet. So the only other question I really have is like, is there another parallel? I'm starting to think it's this one, which does look stronger on the top. Yeah. I don't know. I mean, it's not really interacting with anything right now. All we've done is pushed up. The simplest way to look at it is just pushing higher and then coming back and building support, which is sort of the way I said it earlier. But this waveform structure is kind of garbage. That's probably the best I could do right here, like that. That's the simplest. Down, back up, support, go. This is like an M cross on the upside. So it's pretty straightforward. It does make a higher high, and then it advances here in the end. So it recaptures the trend and then immediately breaks it. And yeah, and I would have just been, in the past, I would have just been looking at whether or not it made, again, doing the same thing. Did it make an advancement over that top? We haven't done that yet. So there's still an issue here, which is that it hasn't actually advanced over the top, which is one of the requirements. It needs to come over 520. Otherwise, it's not pushing resistance. You got to understand that, hopefully you guys understand this, that the reason I'm skeptical of all these moves is because there's a propensity to not fulfill the requirements. Like, if this is going up to the upside, it could fulfill the requirements if it kind of make it to this intersection here, which was where the wedge was going. That's high enough. But it's impossible to know until it gets there that it's going to do it. You just kind of have to like interpret it as, yeah, it's going to probably fill the gap, which we talked about this morning. It's probably going to come back up in a pop that could become a head and shoulders. So we're going to watch carefully around 5. It already pushed above 5, which is good. What remains is this trend here, which is like an uptrend. It's not very high. What's interesting, it goes enough that you could get the SOS maybe above 520. What's interesting is if you look back, I remember this, and this is weird that I remember this. I stare at charts too much, guys. If you look back at this trend here, it's actually met as well, like later. So if you're wondering, like, if people always bring up the questions like, has the operator changed their behavior? Are they changing their algorithms? My answer is no. They're not, because it works. And because this is defining a particular behavior of bulls and like where they want to go versus like bears and where they want to go. So when you win out, you just come back and capture that trend and then take off. But what's interesting, I guess, in this particular case is it's not that steep. I mean, it's steep enough, but if you were to meander maybe for a minute later, I guess it could be steep, but it's like pretty much right there. I mean, if this took a minute to get up there, I guess maybe it could come up quite high, like up to like 540s or something. But it's not significantly higher at this point. It does point towards the targets that we have up at 650. That's significant, I think. So bulls are definitely looking that direction. Maybe not as high as we wanted to go, but is looking that direction. So that's good. This doesn't mean that it stops here. You know, obviously in the example that we're showing right here on the right side of the screen, this is not really the end of the move, right? It's sort of like the beginnings of the move, and then it eventually returns. And later, maybe my line's not perfect, but I would suggest that's probably where this breakdown happened here, is it just kind of left that mild trend behind. And I think this may even go back quite a ways to like near the beginning of the, I don't want to make that assumption. I don't think it does. No. There's another one that goes back from this early trend here all the way through the whole move. That's not it. So that was a leap that did not pay off. That's not the one. Might be closer to this guy, actually. So I think one of these was where we broke down. Yeah, we hooked through this later. See that? So even in like the smallest of builds, this is still like, it's crazy to me how these markers continually like interact later on. We're constantly just navigating waves here. I mean, that is the waveform breakdown later, easily. I think that's pretty fascinating. A failure to come back up to it. So that's what's going to happen here? I don't know. I mean, this is all kind of like speculative. When you're trying to compare like a particular section of the chart to another section, you just got to be careful not to overthink it too much. Like it's possible that that's going to be used. If it's a good trajectory and it's accurate, then it may be used later, you know, repeatedly, but maybe extending it backwards could help. I'm not really seeing it as much of a setup just yet, but we'll see. You know, it's definitely not impossible that it's used up here or something. I don't know. We'll see. Like I said, if it is used, it could be far, far in the future. I mean, we talk about, and that's maybe as far as we need to take that comparison, actually. Because I think conclusion is still the same. It needs to get over 520 and then build a support. And it hasn't done that yet. So we'll see. Maybe it'll do it. But yeah, I suppose if you were looking at this like helicopter view and you thought somehow that was going to play out the same way, which I think is a bit of a stretch, you could say perhaps that, yeah, maybe. I mean, it's possible. If this goes up to the 869 target, it looks more like it. Here's that wave up. This would be like the little breakdown. And then you have some kind of sign of weakness here. You come back up. People get all excited. And then this is like February, March. And then this is kind of what we have here as well. We were thinking it could be something like that. And then you would have like a breakdown after March. And I don't know what exactly that looks like, but something like this, right? More like that. And then you start it all over again. I don't want to do that, Booksy. I'm not saying it's going to do that. I'm just saying, like, in theory, like if you wanted to keep going with that example of like, oh, it's going to be the same. This is June and this is, or January, this is June. You could do that. Why not be huge? Like, why not be as big as this and like go way up to 13s and then go sideways for months way up here? Anything's possible. I mean, we used to make more of those arguments earlier, but the thing about this whole deal with comparing things is, again, like, if it makes sense on the big picture, maybe you can make that comparison. But if you really wanted that to happen, it doesn't make a lot of sense, because ultimately, like, if it goes up to 13 and does that, then it's going to come way back down. Like, where is it going to go, right? Because then you'd have to take like the rest of the chart into consideration. And I guess maybe that's fair because it technically goes to a new low, like goes back below. I guess you could do that and go to 13 and then just keep going with the same comparison and be like, hey, I think it's going to do the same exact thing. It's going to be this iterative move. Yeah, I suppose it's possible. But careful what you wish for, right? Because like, if this ends up doing the same thing in an iterative move, what's to prevent it from like breaking down in the same exact way and doing it all over again? You know, it'd have to be like here, roughly. It's going to $1. You guys are like, no! no. I mean, like in theory though, that's kind of what you'd be suggesting. Like if you think it's going to go up to like 13s and then continue, yeah, you'd basically be saying that you think it's going to drop back. This is a little off because this right here should be closer to the bottom. So this is kind of wonky. Maybe more like this. That's how you get to $1. There you go. There's your bear argument for $1, folks. I hate you, Booksy. I hate you. I mean, like, if you want one, come up and distribute along $11 and then, or $12 or whatever, and then you could drop it, do the same thing again. That never happened. I don't know. Never say never. I think the point being that, like, if you're going to do fractal comparison, it's probably better to just keep it big picture and then don't try to, like, apply everything to every situation. I do think this is probably important in some ways, this, like, funnel. If it does end up breaking out within the next few days and it doesn't go back down to, like, 460s and kind of reset it, I do think this is probably important. And I don't think it's necessarily a coincidence that that could be very close to both of the targets we picked out. Like, if you look at where the 640s are, the 650s are, they're essentially on that intersection. It's not way off. And then the same thing would apply if you just wanted to keep going with the example that we were just doing and looking at it as if it's going to go higher. Like, that's still the same spot. And then you would just say, oh, it's going to come out. It's very similar in some ways to what we just talked about. It would just be much more rapid fire, I suppose. Like, you'd have like a breakdown here, you know? And that's more like what we've been talking about recently, is that you come up to redistribute higher, but maybe not. It might take a little longer, but it wouldn't necessarily be long term. Like, it would be into January and then you just drop or whatever, and you start heading low. This is more in line maybe with what we would think versus something like really high, which would probably take a lot longer. But I guess it's possible. I don't know. I'm not going to sit here and try to make a strong case for it. I think it's a bit challenging to do stuff like that. There's just a lot to it. Whatever. I'm not going to do that. It would be maybe to your benefit to do it if you think that's a viable option. I don't think it's a bad option. I just don't know what the heck how I would do it. Like, I'd have to sit here and figure out where that would go and why, and it probably would interact with this right here some. Why not do it, Booksy? What else are you doing with your life? I don't know. Looking at other stuff. I don't know. The only other thing I could think is, like, maybe if it's kind of 1-to-1, and I don't think it is, but if it were kind of 1-to-1 with that setup where it kind of creates a fan here, and this ends up defining the future movement, maybe the responsible thing to do would be to look at how else these targets were obtained in relation to what came before. Which is challenging because I don't think we have a lot of the same markers, but like one example would be you could use this build out and say, I've done this before, but use like the trajectories. These were bold trajectories. So they were already at play in defining where we were maybe going to go before we got to these trajectories. And these really don't end up defining where we're going necessarily, more like breakdowns later, but a little bit. Right, they're used, but they're probably part of a bigger structure too. So, yeah, I mean, they're there. You could do something like that. This one goes way back to like the beginning, on the very bottom. How would I do that now is the question. I don't know if I could. Like, to reinforce the idea that it could be like kind of 1-to-1. I still think it's a more comparable analysis to go to this, since we haven't actually broke out of the bottom. See, that's the other thing, is that like a lot of folks were doing this comparison. I remember when it first popped and people were saying it was like January. I couldn't really find that comparison is very likely. So like, I know I'm doing the comparison right now to May, and you're like, well, you're comparing it right now. Yeah, but even in like the build out, it's not really, in my opinion, very one-to-one. Like I just don't find it to be. Unless you're just looking at waveforms, in which case it's always one-to-one. Always. They're always the same. And what I mean by that is that the ups and downs always kind of top and bottom in a very similar pattern. And that's my argument, is that you can kind of pick out different wave patterns and they're almost always going to be kind of one-to-one on a fractal basis. But what I think about in this terms is like, we didn't actually break that main creek down. As we were demonstrating here on the big picture, it's not even comparable to January at all. It's much more comparable to what we see here than it is to what we see here. Like, so the argument would have to be that in order, like what we're really doing is trying to push back up to this top, which is what I've been saying about 869. If I end up being right about that, that's great for us and all, but if I end up being right about that, it could be because we're also going to do the following, which is eventually drop back down. So like, keep in mind, there's a bit of a bittersweet pill to that. Because you get the run, but if I'm right, then that also means we're probably going to get the drop too, which is ugly. So yeah, so I think that coming up here, it just doesn't look like what we saw here, right? So it may be that, yeah, from an iterative standpoint, we're seeing something like this where it's going to push up and come back down. I don't think that's necessarily wrong, or more like this, push up and then come back down and try to get to the lows again, like we always do when we're trying to bottom. But like at the end of the day, just because we're pulling a comparison from here does not mean I think it's going to be exactly like what happened. So I hope you guys understand that. It's just a comparison of like a very small breakout fractal. So just keep that in mind. I do think it's important that it's happening, and it could be that some of the localized build out of that ends up being very similar to what we saw here. That's why I brought it up, because it's a similar move, potentially, has a big burst outcome, which is what I was saying yesterday and today about, I know I say that a lot. It kind of gets annoying, right? It's like I'm insecure and I just want to keep reminding you about how I was just saying this, blah, blah, blah. I don't know. I don't do it on purpose. It just comes out. But this is where I was saying we needed to go if we're going to break versus coming down. So this hasn't really changed anything yet. It could still be a shoulder motion. I was kind of warning. I hope it's not. I mean, in some ways I kind of just wanted to go. I'm kind of tired of the back and forth every week to like 450s and 5s and junk. Kind of just ready for it to set up to go and go like everybody else, you know. That's what I'm looking for. But yeah, I still think, man, 650 is going to be a tough nut to crack, and then 860s, maybe, if we can do that. I'm worried about it. I am with Kramer on that one. I think that 6s are definitely a danger zone for us, potentially. These are just all options, potential options, but the blue line is kind of the simplest up then back down. It's kind of the simplest understanding of what I would be expecting if we do this move. So yeah, and then, man, anything breaking below this creek is going to be negative, but I don't think that happens until like 440 or something, or it's like 435 or something. Like, it'd have to be pretty low to just like not hold it, you know. That's really the main bear scenario right now that I can think of, is it drop below that marker here at about 435. Because then it's just a giant push above a giant creek that's really important that then doesn't ultimately hold it. And I would have to look at weekly, monthly candles to see how that looked, but it would probably be pretty ugly. You don't want to see that kind of false push with a hook there. That would just drop you hard. Like judo, throw you to the floor kind of hard. Okay. Well, I mean, we haven't done it in a while. I could try to do a fan and see what happens. I'm not really sure where to put it. I guess I could put my 469 to the test. The problem with this 469 target is I don't really know when it hits, so there's a challenge there. I'm going to just do the best I can by triangulating it on this marker because I don't know how else to do it. What I've found is that a lot of the other charts, it's very bizarre. I think it's meant to kind of mess with your brain, but a lot of them, it's either December 24th, which is just, you know, okay, so Christmas Eve or whatever, or December 30th, which is the last, you know, days of the year. So I'm like, because there's a weekend there before like January, I believe. So I think there's like the 31st and the 1st, or the Saturday, Sunday, and then it's the 2nd, I think, is a Monday, if I'm not mistaken. I could be wrong. No, because I think they're on a Wednesday, right? So yeah, that can't be right. I think the 1st is on a Wednesday. Well, anyways, I don't know. Why can't I just look at the chart and find out? Well, Monday is the 30th. That's probably why. So it did skip. I had in my brain there was a skip somewhere around the 30th. Anyways, it was like the last Monday of the year. So I found those two dates to be quite common. Like when I was using any kind of trajectory targets over the last couple of weeks, they've been popping up a lot. What doesn't seem to pop up a lot is like early to mid or like middle of December kind of dates. So on my chart, like right now, it looks like I've got it going up to December 17th or something. And that comes from, if I'm not mistaken, I think it comes from the other chart because we did the sine waves. And in the other chart on the waves, I think they terminate on like the 17th. So the first one stops here, the green one. This is the one I have on the chart right now. I think it stops right there on the 9th, 7th. It's like the 18th and the 19th. So that's the only place. And then this actually looks more like the 24th again, this top. So let's do two. We'll do the 24th and like, and then it's kind of a mess. They're almost irrelevant because you could just pick one and then move it around. It wouldn't be like significantly different, but, and then I'll pick the 18th or 19th. So we'll kind of just like do 3 even dates because all 3 of those are kind of coming up. And then what I'm going to do on here is hide pretty much everything else except one thing, which is this line right here. Can't hide that one because I need it for what I'm about to do. Why are you doing this, Booksy? I just haven't done it in a minute. And usually if you're right and you have the date right and the price right, you're probably going to find the price is right. Come on down. I don't know the music. It's really famous music, though, I guess. Usually you find that it works pretty well. It may not be perfect. I'm not so concerned about the fib levels as I am about the trajectories, okay? So let's just start with the 24th. Let's start with, see, that one doesn't even reach that line. It doesn't reach 869 at all. Oh, maybe you're wrong, Booksy. Maybe it's not 869. Whatever. I'm going to use 869. I don't care. It's a couple pennies off the line. All right. Now we're going to use a pitch fan because I want to use a pitch fan because it just has more information. We're going to see what we can see here. Okay. Are there any really good ones that clearly demonstrate what we're talking about? I'm gonna go over here. I mean, maybe this is pretty strong right there. That little pocket. This is about as speculative as I'll get on this channel. Okay, so there are a couple that are standing out to me. So what I usually do is I'm just going to pick out the ones that seem pretty obvious, and then I'm going to move the chart around a little bit, but that one seems pretty good here. It looks like there's one right there as well, though I can't quite identify. Maybe it's like slightly low. Again, I don't really think it matters too much if they're not perfect, but they have to kind of match the same trajectory, otherwise it won't work. That one's pretty darn close. That actually meets up with these better anyways. This is interesting to me right here in the middle. See this? This may seem a little bit wonky, and it is, but maybe a bit. A bit. That's also what comedians call their comedian stuff. Yeah, that one's pretty good. So we've got a few here that are fairly solid. This is maybe one of the bigger arguments right now is this guy right here. This one goes up pretty fast. Looks very sturdy. This is challenging on these areas because you do see a bit of a walk down, especially right here. This is very critical. But then it doesn't really follow it except maybe loosely. This might be an argument for like a fib. I can see this. You could argue like it's kind of trying to like traverse the same direction, but it's tough because there's not much else to go off of. There's no information down low, like nothing obviously came before. It was all up high. Those are all pretty good though. So one other thing we might do is kind of move this up. So I'm going to try to keep the same pitch on the fan because it will change. I'm using that resistance as the pitch. I'm going to go back here and look at, again, I'm not really super concerned about the fibs, if you're wondering why I'm moving it willy-nilly. I just want to go back and look and see what's going on in this area. It does seem to me, yeah, it's definitely possible that this is indeed the target. So, comedian stuff. Well, don't they call it a bit when they do like a comedy show? Or maybe that's just the British. I don't know. The British. Just kidding. Guy with a Winston Churchill quote on his stream trying to... So stupid. All right, that's enough of that, Booksy. Let's not go into an argument about the Santa Claus again, like yesterday, about the elves and the Santa Claus. No, but seriously, no, I'm joking. I'm not going to do it again. Yeah, I don't know. I mean, generally, yes, I think it's kind of working, but also no. I don't know if I can make that stretch. So, all right, I'll leave that alone. And then let's go back to kind of earlier. I want to tighten this up and see what I can see from about the 13th area. Let's go to here and see what I can see there. Well, that one's pretty good too. None of these are like quite perfect, but if we found them perfectly, then it would be very easy, right? Like we wouldn't have to really, it would be super simple in terms of like price action. If everybody could do it, right? If it was super easy, everyone would do it and we'd always know exactly where it's going to go. I don't think it's that that precise usually. There's usually one or two markers that are used, and then the rest of them are just kind of willy-nilly. Like they sort of float along them, but they're not necessarily perfect. So the rest of these are kind of loose. They're there, but I don't like them as much. This one's pretty strong, and this one's pretty strong. So maybe. But the only way to do this is to kind of reverse engineer it, because I don't see a lot of hits on it, which again could be thought of as sort of irresponsible perhaps, because you'd be taking like the initiative to say you already know what the end is. And if you begin with the end in mind, that's one thing, but these are pretty strong, some of them. This one I like a lot because of the hook right here. So this is very common on AMC to have this kind of movement where you generate a bottom and then you come through and hook. So this might be one of the strongest cases right here. This. So we may want to revisit it, this area, as I do think this is probably pointing towards the top. I want to say that that already was on the chart though. Yeah, we have one that goes a little more flat. But there may be a steeper one. I didn't do one to the extreme here, and it definitely seems to meet up with these guys. So same with these tops. Like the bull tops are really important. I sort of picked these out based on what I saw as clear and evident hits on the marks. And you can see there's one right there, but it may be better to use a support since we're talking about bull action, not bear action. That's tricky. So maybe using this support and then this support instead of using the, yeah, actually that clicked in really well. Now it's like right where it needs to be. Instead of using the supply lines, use the support lines. But I can't do that here because this is a hook. So that just goes a lot steeper. Not much else to say about that. Perhaps let's just make it as precise as we can and see what it does. That actually looks really solid. I like that one. So this goes way off to nowhere land, but it's a good one. It's still a good line. Trajectories, again, they're probably the most irrelevant if you're going to just pick out like good indicators, but I'm doing it because without fail, if the price is going to accelerate into a motion, you will be able to look back and see those movements. The rest of it, we're kind of trying to jam into a box, right? So this looks like February 13th way out here, which is way different than what we were just talking about. I don't really see a way to cook the books there. Yeah, I don't know. These two seem very likely, but that's already passed. These are both really good anchors, but they've both passed. Maybe we can use one of these instead, since this matches up really well later right there on those two hits. That one's really solid. But this only goes to 772. And ultimately, it's not even close. Yeah, so none of those really worked perfectly. But I think we're onto something. Like, we're getting good values. I'm just kind of looking at trajectories. This is a weak one. These two are pretty strong. I'm going to keep them. I don't know, man. I feel like these are the key ones right here. There's a push down, or there's a directional push here that seems pretty obvious. Maybe it's just a debate about how extreme it is, but there definitely seems to be a bullish path forming this way in this area. And it tried to gather it again, it like lost it, and then it tried to hold it again here, and it failed. And we talked about this a while back, because I think when we went through this the first time, we were looking at this area, and we're talking about if this trajectory broke out, it would have to go above. This is why I thought it was distributive in part, because it'd have to go above here, and it never did. It failed to advance. So this region may end up being pretty key, critical. AMC was halted. That doesn't make any sense. I don't think it was halted. Why would it be halted? We didn't move like even 5%. Yeah. What are you throwing out stuff like that, man? Yeah, don't say it's halted unless you know for a fact it's halted. That seems really like important, you know? Just don't say that. All right. Sometimes changing the no, he's not. He's just confused by something. Don't worry about it. Not everybody's a bot just because they say something that they may not mean right away. AMC halted. He's a bot! I feel like we're getting a glimpse into the future when Gemini takes over the world and becomes Skynet. And everybody's like, you're not a human. You're a bot. Get him, boys! Y'all are like, I'm not a boy. You can get him too, girl. I don't care. Get him, girl. He's a bot. There he goes again, off the rails. You're too nice, Booksy. I know. Now maybe, even if he was a bot, maybe he's like learning and he's like growing and he's getting stronger. We're teaching him. I don't know if you guys saw that commercial. I won't go on. I'm literally working on the chart, so don't get mad, okay? I am working on the chart. He goes like, here he goes again. Time to tune him out. No, but have you seen the commercial for Gemini, that the Google Gemini thing, where it's like, what do I do with it? And they're like, just have a conversation. Okay, so I'm obviously like I'm joking about the whole AI thing and being like, oh, haha, they're going to take over the world, blah, blah, blah. And some of you guys are like, no, man, that's not a joke. It really is going to happen. It's going to be like Skynet. And I'm like, yeah, maybe, but you never really know. So let's not go there. Anyways, but there is something weird about that Gemini commercial that I've been kind of thinking about, which is there's an ulterior motive there, which I don't think they're going to talk about ever, and they're not going to like be like, yeah, there's an ulterior motive. We're actually doing this. But if you think about it for like half a second, okay, there's a very clear ulterior motive to get you to talk to Gemini, and you know what it is without me even saying it. Because AI is it's almost like, it's like spatial thinking, right? Like you're connecting things from all over the place. You're basically, by encouraging people to have conversations, like human-like conversations with Gemini, from a user interface standpoint, it sounds like what you're trying to market to people is like, hey, this is a cool new feature. You should interact with it. See how good it is? Right. But by interacting with it, you're actually making it grow. I almost said stronger. That's like fear-mongering. But you're making it grow essentially smarter, because like artificial intelligence will be taking all of those things and like downloading that information basically. So it's essentially going to be replicating human nature by interacting with humans over time. Assuming that the Gemini that they're talking about is legit AI, which kind of freaks me out, because I was thinking about it and I was like, are they basically telling us like to go do this? Because like people would, no offense to anyone who wants to do it, it's up to you. But are people just kind of ignorantly going in, like without realizing it, making this thing smarter? And do we want that? I don't know, man. You know, like you're paranoid, Booksy. Yeah, a little bit. But I think it's a weird thing to think about. Is the marketing is making it seem like, oh, it's this great thing, it's going to help your life. But there's an ulterior motive there they're not telling you about. Well, frankly, before I go any further with that line of thinking, and I know that's kind of like off topic here a little bit. Stock market obviously has some AI trends, but before I go any further with that line of thinking, I'm not stupid. Like I understand they've already been doing that for like the last decade. Information is being taken from people all the time. Like they already know your trends. They know how to make you buy and sell stuff, or buy stuff rather, because they watch your information. And most people haven't turned off. They just don't even know. They buy these smartphones. They don't turn off all the privacy all the software that you need to kind of have privacy. So they have all these tracking things on your phone. They're tracking movement. They're tracking purchases. They're tracking. That's how the CAPTCHA stuff works, by the way, which is why you fail the CAPTCHA test if you have some kind of VPN, because they think that you're a bot, quote unquote. No, they don't. What they really are doing is they think you're a bot, quote unquote, because a bot wouldn't have normal human interaction with the internet. It would be doing things like systematically. The CAPTCHA test, if you go read about it, those CAPTCHA tests, what they're doing is really looking at your pattern of behavior. They don't care if you don't get the signs right. Obviously, like a bot would have difficulty interpreting a visual input, but there's other ones that like type in a number thing or whatever. And there's a lot of weird code behind it that looks at your browsing data, basically like how did you get to the site? What are you doing? I've failed CAPTCHA tests before when I know I'm right and I'm like, I don't get it. Why is it failing it? And it thinks you're like a bot and it'll say like you failed the CAPTCHA test or whatever. Well, all of that stuff is because they're already tracking your information. And if you think otherwise, then I don't know what to tell you. Like it really is legitimately like that. That's what's going on. So it's kind of scary. So like I'm not saying like this hasn't already been happening, but anyways, I just want to bring that up. So as I'm charting this out, I was looking at this, I wanted to just say like I saw that commercial for the Gemini and it kind of freaked me out because I was like, we're really kind of enabling the AI essentially, like by giving it more information. Because you're these people like asking about private stuff, they're going to be treating it like a therapist. It's going to be strange to think about what that does to an artificial intelligence system. You're basically teaching it about human flaws and behavior, good and bad, behavior. And it's going to be like really, because you could talk to it about anything, Just think about that. It's crazy. This isn't like a person on the other line. This is like a supercomputer thing, that's making infinite connections all the time. And to the benefit of humankind, it might work. Maybe it'll solve the problems of cancer. I find it to be a bit of a moral and ethical gray area myself. That's why I would bring it up, because I'm just like, that's super strange to me. And I'm already kind of like this, but like I might be even more disconnected in the future. Like I don't really want artificial intelligence to know anything about me. Like I just don't care. Like I don't need it. I lived the first half of my life without it, and thousands and thousands and billions and billions of humans did before us. Like I don't know, man. So I kind of freaked out a little bit about it the other day. Not in like a crazy, I wasn't like, all right, kids, get in the closet, It's time to bunker down. Let's go get our soup cans. I mean, that's not what I was thinking, but it was like just this concept of like, oh, you want me to talk to your AI for you? Are you really giving me a feature, or are you just picking my brain? I don't think it's a very difficult question. I think it's a real problem, That's what I just said. Google's already been collecting your data forever. But in terms of like human interaction, you're just feeding it. That freaks me out a little bit. We're going through so much change at work, trying to integrate AI into our work streams. It's creepy. Yeah, I'm not obviously like in that boat right now. I work from home, but people have asked me a lot about the art stuff. It's a big question. And yeah, I've already seen it impact artists, and I've seen it impact because why pay an human artist to do something if you can get a machine to do it for you, for free or whatever? I don't know. It's a good question. I think there's always going to be something maybe that a human could offer. But maybe by the time we answer that question, you're going to have to pay the AI to do it anyways, you know? Maybe by the time we kind of figure out what creativity really means to us and like how it impacts us from a humanity standpoint, by that time the AI is already like, hey, I should be paid for this. They're going to be like self-aware or some nonsense. And you're going to be like, yeah, you're going to make me do it. I'm going to pay for it. You're going to pay me for it, you know? What about humans? They're controlling the AI. Money-making schemes, I guess. I don't know. I always go off the rails at by lunchtime on the streams. People start tuning out. They're like, well, not getting any more information out of this dude. Better go to somebody else. Go on my lunch break. Yeah, pretty much. All right, well, I mean, it's not perfect. There's definitely some issues with maybe the way I did this. I think there's a decent amount of, I'll call it convergence of intersection right here. It's not, again, it's not perfect. It's kind of like what I would expect though. Like if you're imperfectly trying to identify a spot of interest, it's there. Now I could probably make an argument for like the $6 area as well. I've got a triple intersection right here, and I've got a double intersection here. So if I'm looking at the intersection points and just kind of clustering them together, most of the clusters are right here. There's a lot right there, right there. These ones are a little off. They're there as well. So what I'm doing is looking at every line interacting with every other line, and then some of these are way out here off. These are like what I would call like hot zones maybe for trajectories. And then that one's like just completely off the rails off. I'm not going to do that one way out there. You guys are like, that's the one that ends up being right, Booksy. Oh, well. I think that gives me enough though to go off of, because what I'm really looking for is interaction in terms of like positioning, like what are we pointing to? And then that can give you some indication perhaps of, yeah, like price clustering, I think, which is probably how, for example, like an AI would do it anyways. They wouldn't necessarily have the answer. They would just be able to project possibilities. This seems very likely this little region right here. So there's a lot more clustering right there, which is fine. That's good. That's what we want. If there's any more evidence for it, we would want to take that evidence forward. I had said 469, but most of these look a little lower. I like 469. I think that's a good number. Excuse me, 869, not 469. It does make sense when you come back here, looking at like where 867 has a gap. Oh, there's a gap there. Yeah, there's a little gap zone right here. So as an institutional marker, there's another gap right there at 839. We did pass through this already, so it's not like these gaps still exist. We passed through it, I think, on the way back. But certainly, like, that looks good to me in terms of like a potential target zone, 843 to 869. Let's see what interaction we had with it on that run up. That's the only other time we really got to it. I'm going to go to like the 15 minute, and I'm going to look at that area because I don't see anything right now on the 2 hour on that May run up. There is a candle interaction, so there's a bottom and then like a wick right there. It's not the best. If I had come back, if I had just looked at this by itself, I probably would have picked, like the cat ear, I would have picked the breakdown levels. So it would have been here, that hook, probably, and then I think that would have been it. You know, maybe this bottom here. This is close. This is 879. It's close to it, but I probably would have picked this 925. Just saying, like, just try to be honest about it. I don't think I would have picked 869 here. So that number works mathematically in other areas, but I don't know if I would have picked it out. Let's see where that goes, because there was some higher targets, slightly higher targets at 924. Well, actually, that's really close. So these were later targets anyways. This one gets very close to that 924 area, 9 to 924. So our sample size is pretty small here, y'all. I'm not really using like huge numbers, huge amount of data. I'm using like a handful of lines, but these markers, all of these markers could be used, you know, by an institution to be like, that's where we want to go back to sell or whatever. So I'm trying to like scroll around. I don't know why I did that. I should just jump to the present. I always do that. Yeah, so I think 843, that one looks really good. These both look really good. And then, yeah, those two. They kind of look like they're more around this 904 level, which would probably just be easier just to say 9. But so if I pick out the ones I think it's favoring, I'm going to say that's like a standard deviation around 9. And then I'm going to say these two are both good. All of those look pretty good to me. So yeah, I like it. So what was the point of that, Booksy? Well, remember, like, you can look at a stock any number of ways. It doesn't have to be just one method or whatever. But I think that there's always like a chance that you find something new when you take a different perspective and look at it from a different point of view. So I always try to do that every now and then. I don't know. I went back through that chart. I didn't change anything, but where was the other one at? I've seen a lot of stuff going down to 2s. There was a marker that I drew. I kind of want to do the reversal of it. So let me try it. It's this one. I kind of like that marker. So that's a 40 degree, 40.13. No, really? Seriously, Booksy? Shut up, Booksy. Shut up, man. Shut up. Why did I do that? Okay. This is a... Oh, look, a telemarketer's calling. You idiot. Look at that. Some of you are like, I don't know what you just did, but it looks cool, I guess, because it's the same. Is that what you're trying to say? It goes to the right area. It's a reverse trajectory, so it's a flipped trajectory. So trajectory down, trajectory up on these waveforms usually matches. There's weird little things like that you pick up on, and it's... I wish I could write... I mean, I should write a book about it or something at some point. I don't think anyone would read it, but... one of the things I've talked about before is when you get the wave right, this often denotes where the middle is. And in this case, that's hard to argue. I didn't make this up. So if you're thinking like, oh, you just made it up, so it fits. What I did is I took what we just did mathematically on the other side, going down, and where that breakout is. If you recall, I actually did this earlier as well. So I did it when we first came up into the 13th. The reason that I did it on the 13th right here was because this trajectory at 55.9 actually better matched this trajectory here, which was from it was something like right there. I'm just kind of eyeballing it. But it matched the trajectory from the bottom here to the gap fill. And the reason I did that was because in 2020, that ended up playing as the cross for the middle. So when it broke out here on the cross, it ended up breaking out and going to the upside, right? We didn't go down for like an extra spring or anything. We just jumped over. And so there's a literal, very, very, very simple example you can use in 2020. some of you guys probably remember it because I was doing this earlier and we just missed it and I was like, it's not going. And I remember I said that MPW did. It actually set up the same exact way as 2020's AMC. And what I'm talking about is back here. If you go back and you look at from the bottom, from the low through that gap fill region, if I can get the closing value, okay, that value right there, it represents like the future directional value for all the movement upward. Why? I don't know exactly. I think that what's happening when we go into basins, it kind of makes sense and it kind of doesn't. But I think what happens is when we go in, like what I mean is that if you've been following me for a while, you know that we talk about trajectories through the bottom of sine waves and how they're almost always like indications of where you're going to go next. A lot of it's based on that idea of like cross waves. Like when you go across the wave, it points to like future tops. But then we started looking at how in the bottom areas, you often also get these bizarre like trajectories that don't necessarily point towards the top always. Sometimes they do, but sometimes they're just pivots. So I think it's partially symmetry because Bukowski talks about this as well, that method of going in versus method of going out is often very similar. So the directional speed of inward trajectory versus outward trajectory is often really, really similar. It's not always perfect, but it's pretty darn close. So in theory, I used this in the past, by the way. I got this, I'll show you really quick. There's a wave back here. Just in principle, I just want you to know where this comes from. But like, there's a wave back here, which goes around somewhere around like April 20th is the determining middle of the wave. And I found this wave when I was looking at how I could anticipate where that was going to be when it comes back up. And in theory, this is super simple because if you know where the middle of the wave is and you know where that is, you should be able to like triangulate really simply where it goes. You guys are, that's not simple. It actually is, because here's another thing that happened when I did this, is that I found that if you use that, you actually find that the trajectory in, man, it's going to be kind of tough for me to do this now, but I think what I did was like this right here. This is like 50 degrees. It's like 49.9. And then you go to that center mark and you go back out like 50 degrees, 49.9. It gives you, it's because it's a symmetry, it's just symmetrical, right? It gives you an active trajectory to use, like if this were to rebound. So at the time, like this all looks great right now, right? Because you're like, well, yeah, it obviously matches. That is not when I did this. When I did this at the time, it was like here. So I know that right now it looks like it's easy to fudge because I'm looking at it past tense, and you're like, well, of course it's there. Yeah, but I didn't do that. What I did is I said that I think this is built on a wave, and it was based on this structure back here. So I'm demonstrating why I did this the way that I did it. It was based on this structure back here. I did the exact same thing in this time period. I talked about diamond bottoms at that time, and I used it as an example. And it's weird because this is a hard one to do anyways, but it's like you have to take it to the middle. I don't even remember how I did this exactly back in the day. I think I used like the bottom. So like I actually went, it looks like I'm using this right here, but I actually went to, if I remember right, I went to like this low and used that. And I think I did the same thing here. Like I triangulated it based on, and I think it's just a way of like breaking a wave into triangulation structures. So it seems really like complex, but it's actually just like math. Like you're creating like tangents here that are basically triangulating. And if you go down a wave and you were constantly looking at the middle of the wave, it wouldn't matter like where you do it. If you always have the center of the wave, it would just mirror outward as long as the wave center is correct. I don't know. Trying to explain it now, it just seems like stupid. But I guess at the time, like I was looking at this comparison and I was like, oh, it's the same, right? And there were other things that I used, but like that, for example, this is a 56.13. This is 56.13 right there. And so what I found is that that angle of entry, if you know where the bottom is and you have the middle, and that's the tricky part, right? Is if you know where the bottom is and you have the middle, you can triangulate where that exit trajectory might be. And what's crazy is that if you happen to know where, again, this has more to do with those breakdown levels. And at that time, I don't think I was really doing that, but I probably would do that now, is really use like those breakdown levels, et cetera, et cetera. But I had to kind of go back and revisit the methodology or whatever. Point is, you have to know where the middle is, right, on the wave. And I don't know exactly why I thought it was around here, around the 20th or whatever, somewhere in this time period, but I figured it out. And maybe it was just eyeballing the visual of it. You can see like there's a visual wave right here. But at the time, I couldn't tell you. Yeah, I'd have to go back and look. It was around this time period. I remember I kept dancing between like end of May and April 20th. So this kind of splits the difference, okay? So what this did is it allowed me to, with very much maybe misplaced confidence even, like thinking back on it, is like I made that trade off this bottom and I made like ridiculous amounts of money. I lost it all. Okay, so we already know this story because Booksy's told it a million times. But it's all gone because Ape destroyed my portfolio, right? I should have just gotten out and just stayed out, but I didn't, okay? But the point is like that was one of the best trades I've made on this stock, and it was because I was able to triangulate, and it seems like kind of gibberish, but it's not. It's real. So I think what's happening is that I'm starting to develop maybe a sense of like where these patterns are at, and they're projecting off of bottoms and tops. So they're usually projecting off of breakdown values, bottom values, or top values. And it's hard to do anything in the middle except observe where that is. So what I found on this previous one is that when you take that 6308 and you use it in reverse off this top, it's almost like they were doing it out of a sense of, I don't know, like, again, trajectory up, trajectory down kind of stuff. Like, where is the directional reaction to this? And I don't know if that's 100% right, but basically it maps out the future direction after it hits this peak, and it also tells you where that breakout is, and then it ultimately has this hook. So I look at this as the cat ear structure, which is just a microwave structure, right? If you think about the top of the cat ear, it's really not, or the top or a bottom, it doesn't matter. It's just a waveform, up, down, up. And we would normally use that kind of method like bottom, like where's the bottom? I go through the middle here. We normally use that kind of method to maybe determine how that hooks. This is not anything particularly unusual, right? It's just the breakdown, that's the trend, and then it comes back up. And sometimes this is like 50%, though not always. It's kind of a loosey-goosey way of doing it, because it is, in theory, if it's sideways, always 50-50 mathematically, meaning it crosses at 50% mark here. But in practice, that's not usually like the case. It's not like perfectly halfway across the move, because it can be going like up or down instead of just sideways, like rising or falling. So what I did is I took that and then I went to the current time frame, and I looked at this setup right here, and I did the same thing. I went and I did the bottom through the gap, and I thought, well, it should be right, because technically, if it goes from the bottom at 239 through the gap where it closed at 292, then that means that when we get to this point, this should be the middle. Remember, this is where that change of character happened. It did happen. I still think it happened. I'm crazy, I know, but I still think it happened. I think that this is right where that iteration stopped, and then it started doing something different, and it didn't ever change back. But it didn't work out in a breakout mode. It actually went to like a walk down instead. So you started iterating like up, fail, up, fail, up, fail, up, fail, down. So it changed direction here down to the downside. So I had kind of just abandoned that idea, because if we were going to go back up,
didn't really seem reasonable to me that we would go back up to $14 or $15 later, or that worst case that this was somehow now going to like stop really low after the 13th of September and only go up to like $7 or $8. I was like starting to think about waveform whip arounds, like slingshots, where it was going to go up 50-50. They've given it enough berth now, like space here, that I think you can make an argument that could still be at play. If you're still somebody that thinks it's going to go to 13s, that could still be at play, right? But what's interesting is there's another one, and I just found it because when we were looking at this, I was looking at what was I expecting to have happen here. I know it's a little confusing. There's a lot of markers on this chart. Here, I'm going to make these a little bit lighter in yellow so that you can see them, because there's a lot of markers on this chart. This is probably one of the cleanest charts I've ever had, but you got to focus a little bit more on these two. I'll make them colorized as well, like the same way, so that you can see like they're connected. So what I had expected to have happen here is kind of like what we would have expected in what we saw in 2020, which is what happened on MPW, is that it would have broken there and like taken off to the upside or whatever. There's an even steeper one that goes like straight up, and there's another one that goes like straight down, but I'm not using those. Point is like that's roughly where it breaks out. This is the gap up, right? So my expectation was like, okay, if it goes, then on the 13th back here, my expectation would have been that, hey, it's going to break out of the creek here. This didn't happen, and then it would have just risen to the top in whatever way. And maybe it still could have gone to like 869. I don't know. All right, it didn't happen. Right? We never got back above 520s. We never even got back above really like 510. Weirdly, this is where we saw, again, MPW, which has a very similar chart pattern, same operators. This is where we saw MPW break out and do a second top. But AMC did not. This is also where we saw IWM jump the creek and start advancing finally, and AMC did not. It went down for that spring action low. Potential spring action, right? We're not there yet. So like when I look at this, I'm like, okay, so basically like my expectation here was that after it jumped the red line, that it would kind of push out, form some kind of an SOS and then rally. What we just did on the other chart was we just identified that this is also a really strong potential trajectory right here downward. And if it is a breakout point, then it should act much like this one did, except it's doing so on a wider scale now. This is very interesting because I took this line, and honestly, I got to be honest, this looks better because I took this marker that we just made on the bigger chart, right? I was looking at this with all this other garbage on here. It's good stuff, but it's not garbage, but you know what I mean. I was looking at it with those garbage on here, and I'm like, oh, it's you know, the breakout above this main trend, and it didn't happen here. Now both are intersections, so it's not like it couldn't have. Maybe in our mind we're thinking like that was inevitable. That's not what I'm saying. Look at where it is. This is right on the top of that green marker. It's crossing the red line. It could have jumped. This is the same exact setup, and it did jump. So it sets up lower and jumps lower. But in theory, like this should denote like the middle of the ears, because if you go back to 2020, look at where that low is here on that dip. Now it did make a lower low first, but ultimately like this is like the basin, and then it rockets back up through the top. It's starting to look really familiar. What's creepy, if you want to say creepy, what's creepy is I just took this line and I mirrored it to the other side. It's like 0.2 off or something. I'm not going to be able to get it right. They changed trading view, so they added more like hundredths places or something, and it's really finicky now. But I flipped it. I just took the same marker and flipped it, and it works. It's on the 13th. Where it deviated, it went down here, and now the basin is in the right spot. It's in the middle low spot. So what are you saying, Booksy? that would be one thing in and of itself, but then look at where those price targets are in relation to that mirrored line. Here. That's the white line area. So are you saying we're going to 6 or are we going to 8s? Are you an idiot, Booksy? Maybe we're going to do both. You know, maybe we're going to hit 6 early and then retreat and then go up to 8. I don't know, you know. But I will tell you this, if I'm looking at this plainly, if I didn't have this other experience earlier, I don't know if I would have seen it, but if I had to just kind of say, like, is it doing what it's supposed to be doing? In theory, yeah, the iteration here was a push up, but then this one failed to capitalize and go any higher, right? So you have this kind of like push with a cat ear here that doesn't ultimately cross over. This has already accomplished what that did not accomplish, which is it already pushed higher than the opposite side, which this never did. So it's a bigger scaled version of the same thing, is what I'm trying to say. It's essentially the exact same motif. I think I was right when I said it was expanding, although I don't like the idea that, oh, if it's expanding, then this is going to break down again. You guys are like, well, that sucks. So what you're saying is this is like a bigger version of this little tiny thing right here, so it's just going to dump like really hard? Maybe. I mean, it's possible that it just fails again, except that this isn't failing, right? So it would be the same thing if it fails here. Like it potentially could be. You guys are like, well, now this has gone from being happy to like dark. But there's already like a difference, right? Like that's what I'm trying to say. It can't be thought of as like 1-to-1 per se, because in this particular case, I don't want to do this too much, but in this particular case, if it were 1-to-1, this wouldn't have come high enough. Like it would have been a similar setup, but you wouldn't have gone back up. Does that make sense? Like you wouldn't. This didn't come back above the top. It failed. This didn't fail. And then ultimately, like this didn't jump that creek. This did. So they're different. So yeah, you could argue like, hey, it is expanding and this failed, so why wouldn't this fail? And do some kind of like cat ear thing and then fail and go really low, like, you know, so many people are expecting. Well, it could, but you'd have to see the cat ear form first of all. And then, you know, from that point forward, you'd just be like, oh, it's going to do that or something like that, right? So it would be a failure right here to advance. That looks a lot like, oh, retracement back to whatever. Okay, but the problem already is that it's already come above. So if, for example, you know, you're kind of looking at this like, well, that's garbage. Like, I don't want that to happen. I'm not against that idea that it is garbage. Like, it could be pretty nasty, you know. And the thing about iterations is that we already knew this anyways. This isn't anything new. But the thing about iterations is that they would build out in a way that's very similar, like here again, and it'd probably do the same thing again. And it's really very similar to what Stockfather was talking about with his concept of like it's going to distribute, and so it's going to keep doing these LPSYs, last points of supply, and just kind of narrow down into oblivion, right? However, you can't ignore like that is definitely a possibility, okay? So don't hear me wrong, but we already knew that. We already knew that if it dropped back below 430s, it's like pretty much dead anyways. That would be below the creeks, those green lines that we drew earlier. So I don't really think this is anything new. It's just like another kind of like, oh, there's potential bear side to that as well. But I think what's important to note is like, yes, this is possible if they're going to just sell it down. Not impossible. Or excuse me, it's not, what's the word? This is not impossible if the goal is just to sell it down. But if it breaks out, which is where I was on this guy, and now it looks like it's going to do it, or it's close to doing it, if it can manage to break out here, it's going to run up to this marker. And I don't think it's a coincidence that this is like set up pretty much exactly where it needs to be to get up to that top target. Yeah, and I think we mentioned this before, but if you look at, what was it? Like, it's not 6, I think it's like 650. I think it was that higher breach target. It's like here or something. And you look at the distance between like the 869 target and like where this is at 650, it's essentially like right here off of 485, which is a very important number for us. So like a push off of 485 with any kind of a swing around 650, if that were to happen, would be a perfect 50-50 up to 869. So I know like I'm kind of flip-flopping a little bit here and there. I'm talking about both bear and bull side here, but like it looks like complete opposites, right? But the point is that I'm trying to make is like 485 was the launch pad, in my opinion, the whole time. We've kind of made that same argument over and over again. I've said the same thing. Like it's going to hit 45 and take off. I wasn't sure if it was going to happen here. I still don't know if it's going to happen here, if we're going to go down first and then come back. I don't know. We're not there yet. We're only at 499. But if it makes the advancement tomorrow above 5, we may be good to go next week. This is the first target, which is like 650's area. And then the second target is up there at 869. I don't think it's a coincidence that that's exactly like halfway as well. I think mathematically it's just a really solid setup. And if I need to, I'll remind you why I thought that was probable, but there's a lot of reasons. Part of it was that main downtrend, but also, that was a big part of it, is testing that downtrend. But also, once you hit 869, if you go back through 5 or even 485, it doesn't really make a huge difference. The 50-50 here gets you all the way back down to 270s. It gets you back to the bottom. And there was a particular number at 4. If you look at 5 itself, not 485, but like right off of 5, it goes right to 292. So if you look at where the gap is in relationship to 869, 292, right here, it's the reverse triangulation, right? That motion this way is the same motion, that same 50-50 motion that happened in 2020. It looks like something out of left field maybe for some folks, because they're like, I don't really know why you go up like that and then drop. That seems really high. I think we would have said the same thing back here though. Like it doesn't really make a lot of sense. It's the same line, by the way. You see that orange line going down. That's the parallel that we may need to hit. I'm not saying we have to, but we may. You know, that's my guess anyways, and my best guess, my best estimation. It's an educated guess, hopefully, that we hit it. You can see here, like this does hit that trajectory a little early and then comes down. And ultimately, what we looked at back here was where is that distance from the gap? And if you go through the motion of charting it according to where the gap is and where the I want to say it's like right there. The earnings is right there. You can see that that push down into earnings is like a 50-50 right here along that middle. And ultimately, look at where it goes back through. This is really similar to what we just talked about also in relationship to what happened last year in October. So that swing around happens down into the second earnings here. After the first is the proponent for the big push here, much like where we are now. It's like offset, right? So if you look at this, you'd say, oh, that was August. That's not where we are. We're here. It's doing the same thing. I don't know, man. I think it's just offset because this didn't drop down in May. This isn't a May drop down, May, June drop down. This is a September drop down or something like that. August, September. Everything's offset by a few months. And so what's interesting is that I think it's doing basically the same thing, but it's going into the next earnings, which is March. And this was kind of like the way I had presented it before. And then I came up with that weird alternative theory where maybe it just stays up high in March. That was interesting. But this is the idea that it actually could come gap fill by earnings, essentially. Now, this trajectory doesn't have to be this slow, but if you look at where that intersection is right there, it's right here. It's right at the earnings report. right there. So you know, say whatever you want about my methods being kind of weird, or maybe not precise enough for some, maybe too precise for others. But that's a really close intersection to me, and it's basically perfect. So if it breaks down, you would see a series of LSPYs, but if it breaks up, you're very likely going to see an explosive move going into the end of the year. I could not have, I don't even know, like how could you have possibly fudged that? I guess I could have if somehow I knew in advance this line was going to mirror out to that target, but I didn't know that, so I don't really know how I could have fudged that. I'm trying to like debunk it myself, but like I can't even imagine like how could somebody make that up and make it work right. It just doesn't make sense. Man, I think it'd be nice too. If we can get up to 8s and we can all get out before the holidays are over, we're going to be in good shape going into the next year. It's an ugly drop, but weirdly enough, it kind of makes sense because if you take the rest of this into motion, I've been back and forth on this because it's kind of ugly. You take the rest of this into consideration, that waveform, I mean, it's like a huge move back up, but if you think about May into June as the run up, and it only goes to somewhere in like the 2s. Again, it's kind of ugly, but man, what if I'm wrong about the horizontal nature of it? I don't want to answer that question right now. You just keep rebuilding your chart, Booksy. That's what you keep doing. Well, yeah, I don't know. There's part of me that's starting to wonder about something, and I don't really want to freak anyone out about it, but I wonder if no, I don't know if I want to go there today. I'll let you know what I'm thinking, but I'm not going to follow through on it. I'm wondering if maybe this is like not actually flat. If this is actually at an angle like that or something. I know it's a bit weird, like why would you even suggest that? But it's a, because like, you know, why would we not need to come back up to there? Part of it is, some part of me thinks that this setup, the way this came down is just different than the way it came down before. And I think that there's something about this area right here that really bugs me. It's been bugging me for a while, which is this little setup dropped below. Like it bugs me. When this happened in 2000 and what was it? 2019 or something. You see how like the hook value, this actually comes right back up to it. It's very flat. There is a lower drop, like eventually, you know, there's a few of them, a few LSPYs. When doing this comparison, I've constantly jumped back and forth between two values. One is this value right here, which does seem to come off of that trend. And then the other is this value down here, which doesn't actually even get to the trend. Which one is the right one to go to? You can see I've got on my chart two different, you know, beginnings, essentially. I don't know which is right. I can't tell you because I have no idea if the most important marker is this drop at 1380 or if it's actually more important where it kind of came back up. This is ultimately where the supply was at 1097. when you look at that big run up we had, it doesn't favor either one. It goes right to the right to the middle of them, which is needlessly frustrating, right? But essentially, like, it would seem to me that it's just kind of deadlocked between the two, as if somebody doesn't really know. Like, just like me, like, it's right in between these two, you know, where this peak is, and it's just, it doesn't really make sense. So I've been kind of bouncing around between these two arcs, and they're both okay. Like, they both seem like they're part of it. I don't think it's a big deal. I've been making it kind of like, in the back of my head, I'm like, it doesn't really matter, Booksy, because, like, ultimately this doesn't matter because it broke down. This is still a supply. If it gets back up here, it'll have to break both. It really makes no difference. But there is a part of me that wonders if, for whatever reason, this is not actually horizontal at all, and it's kind of like a diagonal. Meaning, like, let's say, for example, you thought it was a diagonal, you might make the argument that it's kind of doing this, like it's kind of coasting down, in which case these are too high, and they'd have to be like down here or something. It'd have to be like turned, like rotated. Why would it do that, Booksy? It's possible they could be doing that, and we wouldn't necessarily know, but it may be possible they're just doing that because they don't want to go as high here. It's that simple. You know, it doesn't have to be what we think it is, where it's gonna come back and jump the creek in the same exact spot, but do it like opposite over here, you know, in the future, which is kind of where my argument's been. It's that you're gonna push down and then slingshot back up, you know, and then you'll be up above. If it's at an angle, you could still accomplish the same thing, though. You just don't come as high. And it seems a little strange, but it might work all the same. I think the reason you might do this is if you don't actually think you're going to go as high, you know. I don't know why that would be the case. But what if, like, instead of wanting to go back up and hit that trend, something in the shift, like, changes their mind about it? I don't know. And they don't actually want to go back to... they don't actually want to go back to 60, you know, like we thought. What if they just really want to go back to just enough to get this gap filled, like right there, and that's as high as they want to go? Now, most of you guys wouldn't complain about that, but what it does to the chart is it changes the dynamic of it, because it's like, okay, well then you don't actually get to the creek necessarily at the top. You know, there's all kinds of weird little things that change. Like, it wouldn't be as high, you wouldn't go as far. If this is not the true line right here, because remember, this is almost identical, by the way. This is like a parallel. This is like 51.69. This is like 52.4. It's almost the same line. So the implication is, if you're following this line up, you're going to have a very similar move, because frankly, this is moving between the same parallels down bottom, and it's taking years, which this took 2 years. It's taking the same amount of time here. You would expect it to kind of push up high and then meet at that intersection. It's not a complicated chart in some ways. It's kind of simple, because you take the parallels, which you already have. We've already got the orange one on the screen right there, and you just apply it to basically the top, or that intersection at the top right there. And that's where you would expect to hit. You'd expect to hit it like right here at $70. Well, it's been nice to have that number, right? Because we're like, well, that's convenient. It's just like the previous all-time high number. And it looks really good because it fits like a glove that you could be pushing up pretty far, you know, in a short amount of time. And everybody gets excited about that because you're like, oh, it's going to be a May, June, July kind of thing or whatever. Okay. So you would say that. So that trajectory upward from the bottom to that gap is almost the exact same as the bottom to the gap here. And I already mentioned like how freaky that is, because it is the same like level. If you look at where the gap is there, it intersects the gap here. Right? So like a lot of that stuff is very comparable like right now. It's very similar. But if in theory you change it, which we kind of are arguing that it could be the case, if this only comes up to here, we may have changed that trajectory. And I don't know, that to me is really different. Like that's a significantly different trajectory. And it's starting to make me wonder if, I know this, I kind of go back and forth about things being like predetermined or not, but it kind of makes me wonder if that might be why maybe, I mean, it's a big maybe, but it might be why this set up lower here instead of being like on the level, because this was definitely, without a shadow of a doubt, like on the level, timing wise and everything. What if this angle were lower, you know? Would it have affected the overall breakout? No, but it would have affected the run, like maybe the total distance, perhaps. So if this were like angled down, it's very possible and conceivable, I mean, that this could have been like lower and it still broke out, but it didn't go as high, right? It's just a thought. And it reminds me a little bit, because like this could have been like at an angle, and I don't know, I'd have to mess with the angle on this thing, but this could have been like at a slightly lower angle. It's just like, where are you aiming, right? If your aim is to go higher, you could have this tilt up. If your aim is just to go sideways, you don't need to do that, which is not what happened here. They didn't do that there. They just went sideways. But yeah, you could have done it like a number of ways. This kind of stuff happens all the time. Like this happened back here. There was a downward arc that was angled really low. They don't have to be like horizontal. So part of me wonders if you just offset this and that was the intention. Oh, we're at 525. We're like breaking out. I'm not even like talking about it. Good for us. If you offset this though to come down, we're at 528. We're going to start squeezing, I think, if we keep this up. We did it. Yay! Woo! Yay! Woo! Yay! I'm just kidding. But if we were using a 532, woo! Yay! Where is everybody? Everybody like went to lunch. They're gone. Booksy's talking nonsense. This popped too quite a bit. There it goes. Well, 530 looking good. Yeah, so in theory, if you left early and you hit this $8-9 area, it could mean that this is the right line and not the red one. Like that they've made an adjustment for some reason. I don't know why they would do that exactly, but if that's the case, yeah, it's weird, but I actually think that it may be that this takes a longer time and ultimately doesn't go as high. You know, this could be like an SOS with a longer backup or even more just a downward backup that doesn't go as far the second round. We're at 530, so we've made the push. I told you guys I was going to change my tune if it makes that push. I'm changing my tune. Because making that push means that it has indeed found support here at 485, and ultimately like the rest here is kind of history if it can keep going. I'm not really convinced just yet. We were looking at that comparison earlier. You're like, what do you mean you're not convinced? You said you would change your tune. Well, we were looking at that comparison earlier, and one of the things that stood out was the break above. I think it was this one. That was about the only thing I could take from it, the comparison. So here is the chop along it, and then it went over the top. So there's a possibility of a return back down still, since technically this just made a new high. That's good. We wanted the SOS. It is not impossible. It's a big volume bar. It's not impossible that this comes back by tomorrow and like comes back down to like 510 or something. My big concern is that it holds here. So this should be like an M cross. 1, 2, yeah, there should be one more. We're missing one. Could have been that, I guess. Maybe it's not missing. No, I think it's missing. It should be another back right here, and then it should jump over and go. Let's effing go. That's what it means. So we'll wait it out. We'll still need to wait and see. So the resistance push, very positive. Now let's see support. That's the resistance push right there. It's not support built yet, but we may get there today. It could come back to like 510. Yeah, so this is starting to seem pretty likely that we may just accelerate and go. Friday runs are usually really good for Mondays, so if we can get the boost on Friday, we usually get a good continuation Monday. So this backup didn't go very low and ended up catching around 485. That's the magic number anyways. There's really nothing left to do. Just wait. We spent 6 months talking about this, so let's stop there. I mean, don't stop now, Booksy. Well, I have to, because you can go on and on and on, but at the end of the day, like, if it's going, it's going. We are making the advancement towards 6 now. In my opinion, we've made the jump. We backed up. We did hit something good. Let's see if it holds. And we should see a pop. But in theory, this could go on for another 10 to 12 days. 10 to 20 days, really. So we may have a lot of time here to chop and back up and yada, yada, yada. Calls are still kind of dead. They're not really moving very much. But give it a day or two. If it keeps going, it'll change. Probably. You're not going to like me for this, but I'm going to look at something else really quick. Excuse me. I need to check something. Guys, not MPW again. It's dead, dude. It's dead. It might be. But there was a similar setup on MPW. And I'm not convinced it's done yet, but I'm kind of curious about something. I need to look and see. Volume's dropping. This is strange. I think I don't know if I want to do that, but you guys are like, why aren't you talking about AMC? AMC's back to 520. That's good. It's okay. It went pretty high. It's going to chill out for a minute. It needs to relax. It's got the first move. That's important. We knew it needed to move up pretty far in order to advance. It hit the yellow mark. That was the second mark on this chart. So we got that right. Interaction here, needs to hold. This is a better chart right now. It's really clean. Just needs to hold on to this spot. Build support. Massive volume spike right there. This time I'm starting to think it's starting to become more comparable now. We're talking about these volume moves to more smart money movement. Big buy-in, chill, back up, buy-in. And GME is up 8%, so that went to where we thought it was going to go. That's good. I'm not sure if on GME, like, I thought this was going to happen yesterday. So like I know that we're a bit late to the party or early. We were a bit early to the party yesterday. I'm not mad about that. I just figured it was going to happen yesterday. So I had this drawn out. I'm not convinced it's going to come back down. This was more of just like a theory about how it may travel going into earnings. But if it jumps back above, there's really no reason to doubt it continuing. So I didn't put that on this chart. But if it can make a support here, just like AMC going into the weekend, it should be in a good place to potentially just ride up. The issue was that there was like a possibility here that there was going to be a wedge. It didn't really form, so I don't really count this as a wedge. So this was the wedge target. At this point, you would just watch that and see if it builds support above it. Otherwise, you could come back down. It's pretty straightforward. This is the supply zone, so it's not complicated. It's pretty straightforward again. So if it loses this at the supply, it's going to try to go back to this demand line right here, right in this little pocket, probably 26 on the 10th. So just keep in mind, like, it ain't over till it's over, right? 9% is a huge swing, but that was kind of expected. It hadn't checked that mark yet. So at the very least, you know I'm not like blowing smoke in your face. I've got reasons for thinking things will come back like that. And it did. Conviction in the move. The move and conviction in the move are two different things, right? So we need to see if there's a conviction to the move, which you'll see is evidenced with volume and then follow through. Now the calls are popping like 50, 60% on the day. Now they're moving. They were dead in the water a minute ago. So they're really alive now. GME calls for January just jumped over 100% on my charts. So huge, huge, huge jump. I don't think it's that reasonable right yet. Like it should be much bigger. 100% sounds like a lot, but it really didn't move that much. So it's like, well, yeah, I mean, I guess they changed enough. 40 cents, that's quite a bit. Yeah, GameStop looking pretty good. Not bad. I'm just not sure if this is going to hold because I feel like it was going to try to do this and then sell back through. So I'm a little curious. AMC the same way. Needs to hold where it's at now. Has to be that pocket right there. It's enough if it closes high. It can kind of interact here and then come up and close pretty high. It just needs to stay above the creek here, like at 510 or thereabouts. If it starts dropping through 510, you could be in trouble. I don't want to jinx it, but it is what it is. So earlier it was just saying like it's missing a wave. You can't really see it on the 30-minute anyways, but it would be like here, here, and then back here towards this top, maybe this top. So again, I think it can come as low as like 510. It'd probably be okay. You want to see it build back out above 520 like that. All right. Easy come, easy go, right? That's how they say it. These big candle bars are fun for like a minute, and then you have to like take in reality that it has to hold support. Otherwise, it could just be a big sell candle. You don't want to see it slide all the way back down. It's going to dump if that's the case. So let's see it buy back up, hold above 510. Yeah, that's fine. Now I'm like getting stressed. I don't like watching the candles. It's funny because like for as much as I stream, I very rarely have ever actually watched the candles with stream. Like, we almost never watch the chart. I know it sounds weird, but we kind of like observe it and we're talking about past, present, future, but we're almost never like, well, maybe more past and future, but we're almost never like just watching candles move. I don't really like it, to be honest. That's why I set alerts. It's not like, I think it's just a temperament thing. Like, I just don't really care for the suspense. I don't really like seeing it fail either. That really sucks. Well, right now, excuse my French, this wick on the 30-minute did open and close, at least for now. I mean, it's over, I think, because that's, yeah, it's already made a new candle. That one opened and closed beneath the top. So, not the strongest. And then it looks like pretty quickly it slid back down through this support. Yeah, I think it hit low of 509. So it's not looking great. I'm not going to call it yet, but it's so-so. We really want to see that buy back up and push back above. You guys are like, we're overreacting, dude. It's only like a penny. Because you don't want your first action to be a reaction down, like to break support. So like this could have, if this were really, really, really strong, right, it could have held above 510. If there were enough buy orders there, there's no reason that it should get to 509. So you have to be careful. So the fact that it came slightly below, I'm not sure what to make of that. It's not below 5, but I'm going to put the marker there and just kind of leave it there for now. And we'll come back to it. And then the rise here, it's the same deal. It kind of tested high, and now it's going to come below. And that was this trend from back here. This is just you call it like an ice or something. It's a rising trend that was lost. Now it's got to regain it. So this has to build above it. It cannot slide back beneath it and or it'll crash. It needs to hold above. I understand like the idea of max pain and all that crap. People are going to throw that at me like, well, it could just go down and then back up. Meh. You know, like there is such a thing as an upthrust and weakness, and you don't want that here. You want strength. So you don't want to see it like push up and then drop and close way down here. I mean, that's weak. That's really weak. So if you're going to do the move, do the move. So for now, kind of tentatively watching this to see if it does hold about 510. I'm not convinced they're going to run it on a Friday, so maybe we'll see what happens. I don't really like the idea of sitting around here all day Friday either. I don't really see many options here for the bull. So you either hold this and just go ahead and advance to new highs, and you basically could set up, I mean, you just rally going into Friday, or at least set up above 530, 532. 535, 532 is a pretty historic support resistance for us. So maybe we can get above that. The only other option I can see is just chopping here and just holding above 5. I think going below 5... So like, for example, if we bounce here and we do like a little auto reaction and then we come lower, that could be really negative. That could be a sign of weakness. Be watch out kind of thing. We could have a situation where Friday we do drop back down to 5 or 499. There's going to be a lot of bears on this chart that want it to go back down. So there's always going to be like a second opinion type deal, right? We just need to watch what we can watch, and we'll work from there. I think there's always going to be an alternative, right, to the bull side. That's just the nature of the market. This would be the alternative, is like a weakness bring it back down, like sort of pin it beneath the previous top and then bring it back down. So we're getting a reaction here now off that mark. I'm still not a big fan that it came below it, but it's okay. So at this point, you want to make higher lows. It can just compress here. Like, got to keep in mind, this may not move. I know I'm not trying to be a pessimist here. I'm being optimistic, actually. I'm just, again, realistic. if it doesn't advance now, it may not move much at all tomorrow. But what you'd want to do is watch, if you're not able to watch a stream or whatever, and you're just going to kind of watch the price from a distance, you'd still want to watch and see if it keeps above 509 and if it makes higher lows. It can make lower highs, that's fine. You want to make sure it makes higher lows. And that would be a sign of strength in the market, that if it's going to compress, and it does want to compress here around 520, that's fine. Going into Friday or Monday, even, that's okay. You just don't want to be in a situation where it starts making lower lows after that first bounce right there. I don't think you want that. Ethan Gallant. I mean, you just got to look for yourself. His tweets move the stock. And immediately got a pop and halt. Okay. But, I mean, I drew this yesterday. So, okay. I think you guys misunderstand my meaning when I say stuff like, I don't really care about that, because this is literally what I had on the chart yesterday. I think I had it over here. So it's not about, I get what you guys are saying, but it doesn't matter. Who cares? I don't care. It's a failing argument, I guess, because it doesn't matter what I do or how right or wrong I am at different times. It won't make any difference to some folks. So nobody's arguing that his tweets don't have an impact. I never would say that. That's silly. And if Elon Musk's tweets about Tesla, it's going to move the stock. You know what I mean? Like, it's a given. That's not a question in my mind. Weirdly coincidental, maybe. Or maybe he understands TA better than he lets on. AMC Resurrection Day. We're not there yet. We're almost there. I think he might understand TA more than he lets on. I think he pretends to be stupid, and he's like jokes about it. I genuinely think he's reading into the charts a lot of times very similar stuff. I don't know if that's true, but I'm just saying. I guess I don't, maybe it's this idea that like I'm an advocate for charting, and so it's like I put in a lot of time. So it's like if I said, oh, I think it's going to come back up to this level right here at 3087, or maybe come up to, and I said this like yesterday, and it should have a pop here, and then we'd have to watch it. This is literally like what we drew up yesterday. So I'm like, it's confusing to me when I do that, and then someone's like, oh, it's because he tweeted, it's not because the chart wanted. It's like, well, that's what we're about here. So I guess it's cool that he tweeted. I'm happy that you might get an extra bump of volume, and maybe it's right where we needed it to be. That's a good thing. I'm not going to argue about it if it's a good thing. But I don't know, guys. There's 100 people on here, and I was talking about this all day when there was like, there are 100 people on here now that's running. But if you were here, I don't know, 30 minutes ago, there was like half as many people, and we were talking about what this breakout would look like and how it would work out. So we got to be prepared, I guess. Hopefully, if you've been following for a while, you have some indication of some idea of maybe how you might trade it. I can't tell you how to trade things. We are pushing the second resistance here. So I know I've got a lot of gobbledygook on this chart. It is pretty messy. I'll go to my other one and show you. When we pushed up, we moved the needle. So this is always good. So this moved the needle here. See that, how it pushed this resistance right there? And then you got another one right here. also pushing the needle up. Very good. This is the game of the bull markup, is you need to push resistance and then find support. Push resistance, find support. It can go pretty fast at times. It can go pretty slow at times. Yeah, well, that's what happened last time, and I appreciate the super chats. That's cool, man. You don't have to do that, but I appreciate it. That's what happened last time, and he actually got in big trouble. Like, people were saying they were going to sue him or remove him from their platform and all this nonsense because they thought he was manipulating the stock. But I can go back on the chart and show you where he tweeted, and it is a big moment, but like everything else that led up to that moment was already a breakout. Like, it had already broken out. So I was really confused by the I was just really confused by the whole, like, oh, he caused it, he's manipulating the stock price. I'm like, I don't know. How do you prove that? I mean, it doesn't make any sense. There was a huge technical break on GME. I bought in again, in addition to what I already had. I bought in again at like 17, 18 because there was a big breakout. Then he tweeted, and everybody's like, he caused the stock to run. And what was weird about it was the mainstream media was like, he's a manipulator. And I'm like, what? No, he's not. It would have been pretty easy if he did go to court for someone to come in, like a technical trader to come in and be like, yeah, this is why the stock ran. He was just there. Like, because he's a public figure, I guess, he's not allowed to speak his mind about things without getting in trouble. I'm not against the guy. I hope you don't ever hear me think that. I'm not thinking that. I just don't think they gave him too much credit, like, basically. I mean, he does move the needle, but same thing right now, folks. Like, I'm not trying to be a jerk, but like, what do you expect? It already jumped over the creek. Like, it was broken out. It had made the advancement, We've been talking about this for like 6 months now, and it finally did it here. And then we shouldn't be surprised if it does continue. I hope it does. I hope we don't come spilling back down, But it's going back through the range, it's creating LPSs, it's leaving some weakness behind. We'll have to address that at some point. We talked about it when we talked about it with JP the other day, and I keep talking about him because he was the one that brought it up. But I made a case for it this morning. I said I think it would be stronger if it hit 460s and then recovered 485, but it never did. So we'll see. At this point, I don't really care. I think we're probably coming back anyways later, so you already know that. So I have a lot more ears on the stream right now and eyes on the stream. This is kind of where we're concluding. I think there's a decent chance we're going to hit 6s, decent chance we're going to hit 650s. I think there's a slimmer chance, but it's still a good chance in my brain that we're going to go all the way up to, I do genuinely think we might hit that 869. I think there's a much slimmer chance that we go all the way up to 1380. I'm not saying it's impossible. I just don't think it's as strong of a chance. Okay? It's out there at this point. That was the original target, was like 1380s. I'm of the opinion that we're probably not going to get there, but who knows? You never know. I think 869 is enough, and I think it's going to give us everything we need going forward to come back. 1380 feels excessive, and I'd be really worried if it hit 1380. I'd be really worried about the crash, because technically if it's a double flush, and if I stick to my guns about that and it's a double flush, then it would be worse going higher. Like, way worse. That's like an extra $5. Which is not about the distance traveled with dollars. It's more about percentage, but it'd be a percentage added onto it, not a dollar value. I'm cold. He advises Kitty. Roaring Kitty is the guy who tweeted Shadow People. He's a he's the big guy. I mean, he's the guy that started the GameStop stuff, or he's credited as starting it. And he came back right before the last big run up in May and got in trouble, I guess, for tweeting again, or quote unquote got in trouble. I appreciate it. They're just there. Like, I don't know. I don't know how in the world things could orchestrate the way they do, but they do. It was there. And I don't think there's a lot to debate at this point about targets if we continue the way we're continuing. I guess if I had the biggest concern that I have right now is the one that I've been talking about on stream more lately, which is this kind of worry that I have about stopping short. And I really do think that there's this pocket right here. This is my biggest concern area in terms of the overall. Like 565 is one. Someone talked about that because of there's a dilution, auto dilution or something. It's complicated, but it can be, right there. And then there's also this other target at 6 and 6.5. And 6.5 up to 670 seems very likely to me. And I'm a little bit nervous about that. So if I had to pick like one value where I'm like, I don't know, these wave crosses that I have on the screen here, there's a red, a yellow, and a green going up. Those are all like in sequence, could be hit. Each one might be tested and measured, and then we would advance. But they all interact with another horizontal, which is usually more about the supply levels. There's definitely a supply level here. Absolutely, like 100% there's a supply level around 650s. So assuming that we get above the tops at 595 and 580s and you get the SOS, you still have to worry about falling short and not really going anywhere. I think it's a tough one because there's a lot of me that wants it to just go. I'll tell you what I'll be looking for, and it's kind of already implied here. I'll be looking for that cross up and over. So like on this chart, I know this is like probably my messiest chart right now. But on this chart, there's a lot of decent convergence up here around 650. What that does do is if you get there quickly enough within the next week or so, you would be above, and it's maybe hard to see, you'd be above the top, and you'd also be above this green ascending line. That's kind of my main mark. This is the one that has, in my opinion, like the most weight to it. So I've been using it the most. Yeah, and I think the rest of them are important, but if we can get above that mark and hold it, it'd be like right here. If we can come up above here and like hold above here, this is essentially like an SOS. So what you usually find is that's triangulated in the market, and it is. So the wave that is built out here, if it can get above it, it'll be like an SOS. And that's usually what happens, right? Now it could be kind of like on it or on top of it. It doesn't really matter. It's just at some point it would need to be like above there. If that occurs, then this is a really decent chance it's going to continue. And I'd be a little bit nervous maybe about 650s. And then from there, I'm not really looking for anything except 869. I don't really have any other targets. So I'm cleaning my chart up a bit for you so you can see it better. Then I'd be looking at potentially, if this held and didn't break down, I'd be looking at going to the 869 target probably by the end of the year or by Christmas time. So at this point, my biggest concern, I suppose, is if you come up above here, let's say it just like rockets past and goes to like 650, it doesn't touch it, and then it comes crashing back through, and ultimately like this forms like a distributive action. It may be a little difficult to see that. I'll put it off to the side. That would be my biggest concern. Like this would be distribution, right? You get like a little weakness there and you get like upthrust, and they would ultimately like sort of pin beneath this line and the pink line that you see, which is the top. that would be the most dangerous of all, because it would make it look like it's running really far and everybody would be like, we're going, but then it would slide down and then you'd be like, oh, it's just backing up. But it would be doing like up thrusts and you'd end up getting like screwed over, probably, thinking that it's going to run. Those are the worst. And they happen quite a bit on AMC. Okay, so you got to be careful. So that's my biggest kind of worry, I suppose, if I had to pick one thing. I'm not really that concerned about these other ones at the moment because they're sort of in a place right now where I don't really know if it's going to... I mean, I guess it could technically stop here and just like go back down, but that just be weird. You know, I think what's more likely, I'm talking about 510, is that it could technically like chop and then go back to like 510, and that could be a backup. You can see on the 4 hour, that candle doesn't even exist anymore. The 30-minute candle, it's not there, it's gone. And on the 4 hour, you could see that that might be a little more reasonable if it did back up. We were talking about maybe going back there possibly if it didn't advance right away Monday. So you see a back up to like 507 or something, or 5 whatever. That technically is fine because it would be above both of these and it could still push out. It's just an M cross 1, 2, 3, 4, right? You see the wave up, down, and then back up again. I haven't really ventured beyond kind of the more basic stuff today. We've been kind of going back and forth with some different models, but one of the things we talked about was the possibility that this is a 3-wave motion. So the second wave here is 555. Usually the third wave, I'm sorry, is 555 on a 1618. I'm using the double bottom. It's possible that that's maybe not the best way to do it because technically it did keep rising. You could use this. It'd be a little higher, 570. Doesn't really make a huge difference, 555 to 570. It's kind of the same area. We already know there's resistance there because that's where these tops are. It makes very little difference. But short term, if you were using this as that first wave, you could do the same thing here, but do it on the wave 3. So if this is like a 1, 2, 3, and then you're going to go 4, 5, this could still be building out a 5 wave within the 3 wave. Excuse me. So you'd be like 1, 2, and then you'd have a 3 here somewhere, right? And then a 4, 5. And that could all be part of wave 3. Does that make sense? I think it does. Y'all are pretty smart. I think you know what I'm talking about. If you don't know Elliott wave, don't worry about it. I don't know it that well either. I just kind of know the basics. So in that case, this could be a 1, 2 with a 3, and the 3 could go to 548. And then usually, again, assuming that this was correct, it goes to 548, which is just underneath 550. Just kind of mark it off right there. Goes to that little pocket right there on the 3. Then usually the retrace is like a 30% to 50% retrace. So it could come back as low as 485 again, though that's a complete and total backup, right? It would be more likely to come back to 5. So even in the case of like a 3-wave here, if this goes up and then breaks down, I would prefer it not go beneath 510, which is the 2.9. Not even sure why I have the 2.9 on here, but I do. I must have been doing something with it. The 3.8 actually looks like it goes right to that like gap, or that takeoff point right here at 498. So it's not impossible. That would be back to the creek. Not impossible. It does that and then does a wave 5. And so in theory, that's not a very strong move to get you, but it gets you started, I guess. So in theory, like if this were ultimately only going to go up to, yeah, that makes sense. And then this goes up, that'd be the 3rd wave. So this would be wave 1, 2, 3, 4, and then 5 would go up about the same as 1. So if we do the same, just on average, this is not always the case. Yeah, I mean, it just depends. It's still looking like it would get back over the top. So It could be a little bit shorter than one. It could be a little bit longer, but I think that would be a reasonable thing if you were Elliott wave trader to look at that and say, I think it's going to do this. And that could be wave 3 on the bigger picture. So 1, 2, 3, and then you'd have a 4, 5. This is where things get a little dicey because 1 is a bizarre wave down here, but that's about as high as it goes. And then 4, 5, I mean, again, like you'd look at retracement values from all the way to the bottom. No, you'd look at retracement values from 3 up to maybe where it goes. It's complicated, right? Yeah, and then maybe this one doesn't do as big of a retracement. It comes down to like 5, 3 or something. It's kind of weird because like when you think of Elliott wave, it just always feels like that 4th and 5th wave feel like garbage. They are sometimes. Like sometimes that 5th wave is just like a secondary push that just barely goes over the top and then it just reverses. So it's not always like, really good. Yeah, you might expect something like this. If it were going to only do the Elliott wave, that could get you to maybe the 630s to 650s. So what about something else, Booksy? What if there's a bigger wave? I don't know. We can count this as a 1, 2, I guess. But I haven't really done that, and I don't feel like that's necessarily wise because there's a lot of problems with that in terms of this as a wave. I don't want to get too deep into that, but it makes you think that it's just going to go to the moon, and it may do that eventually, but it's like that kind of thinking is usually not quite right because the problem is that you're only looking forward. So this looks like, oh, it's going to go to $53. See, it's going to go right back to the top. Maybe. That'd be nice. We'll see at 53 kind of thing, The issue is that it kind of ignores what's going on the other side, which is if this could be like a corrective ABC, right? If it's going to make another low, and you wouldn't necessarily know unless you're counting down as well. So it's like you could do that and assume that it's going to do a 5-wave impulse, but I don't know if that's the best thing. It really could just be like an ABC correction here, where it just slightly goes above 11, or may not even, And that's just one of those things that having a better understanding of Elliott wave would probably help. I don't have that great of an understanding of it in terms of all the different measurements you can do. So I would not do a 1, 2, 3 here on the big picture. I just think that'd be unwise. I also think it doesn't make any sense for a lot of reasons. But for the short term, sure, it's reasonable to think that that could happen. And you just take it one step at a time. So, yeah, so maybe this gets up to 450 or just below it, maybe 548, 549. And then at that point, we'd be looking at a retracement. I don't know, man, this looks like it goes all the way down to like Friday, but it doesn't have to be like that. I think point being is probably this red line. See, I've got it like where it only hits this creek, but I actually don't think it necessarily does that because we already tested the red line, and then I don't know why you'd retrace that far. Just cause, I don't know. Usually it makes more sense if there's like a trend there. There is. So if that makes more sense, then it's probably right. So maybe this is a very tight pop and then pull back. Get like a turnaround Tuesday or something where Monday, Tuesday it's back down, and then people are wailing and gnashing teeth and stuff. And then Tuesday turns back around and heads back up. It's a short wave considering the way we were counting it, but it kind of makes sense. And then I'm just presenting an alternative to what I was saying before. And then probably whatever this has in terms of a creek, I'm not even sure where you draw it. Probably end up being like this or or something, you know. Actually, that looks pretty good too. That's a break of that bigger one, isn't it? So now there's like a three-way intersection right here. There's a lot going on right in this little pocket. So you may expect to see 510 again, like we were saying. There's a lot going on right here. There's like a huge amount of potential support. And then, I don't know. It would just depend on how high this goes, I suppose. We're not quite there yet. Like if it only went that high and it doesn't push up to like 548, then probably where I have this backup is about right. But usually it starts going parabolic at the end anyways, so maybe. It already pushed that resistance, so I'm going to use the higher one. When CNBC reports this, we're going to fly higher. The spreads are like 30 cents. Yeah. HKD sunk today like you said it would. Oh, I'm not happy whenever I see stocks slide. I don't really remember HKDs as much. I mean, we went through a lot yesterday. If you guys want to request stuff, come on like a light day. It's a lot easier for me. I'll take time to go through stuff with you. I do take requests all the time. We charted like 10 different stocks yesterday, and I think HKD was one of them. I don't particularly remember every detail of the ones we chart, though. If I like a setup, I'll mark it off with a alert so that I know to come back to it. And until I see the alert again, I usually don't come back to it, so I am not usually checking everything. But if you give me a good setup and I can put an alert, I'll set it up, and then we'll go back if the alert pops. So in terms of the RSI, I'm on the 4-hour. It's not exactly like a small time frame. I'm going to leave it where I have it. I think I have it in the right spot because it's where this interaction is on the top on the 13th of September. It's already pushing to overbought on that RSI. So there's a bit of a mixed bag there. I do want to see it go above. And just so you're aware, technically, like the first day that this big push happened on the 13th, like we were already overbought. So it's not like, and it ran another 100%. So it's not like on the 4-hour, it's necessarily going to crash just because it hits overbought territory. But you'd have to get some follow through on that, or you'd have to chill out the RSI a bit. So we may see that cool off again into Monday, Tuesday. That chills it out. Dang, we got that right, didn't we? With that waveform. That's really good. I picked the right one. I knew that they were all three possible, but I said that I thought the green one was the most significant, so that's good. I'm glad I picked the right one. Oh man, we're up 10.5% on the day. GME's up 9.9%. ChargePoint's up 12% today. MPW just sitting in the mud, twiddling sticks, kicking rocks. I wonder if they're going to rotate capital. The thing about these stocks is they almost all have the same operator. They all have Vanguard and BlackRock. And I'm not sure that's a surprise to anybody considering how much money Vanguard and BlackRock have in the market, but it is important to note. Occasionally you just got to remember, like, it's the same companies. So where some people maybe see a connection between companies based on who, like popular figures like Roaring Kitty or whatever, go to the Fintel and just see who's invested in it. It's probably more the reason that they move together than anything else. So yeah, if this is an impulse and it goes to 548, I think we're going to see that pullback. It's going, man. It might. Some of these guys, again, same institutions. I think they're just rolling money around, liquidity around. If you're saying pull back to 2 or 3, then where from there? That's when I think it starts making moves out, like big picture wise. I'm not going to go through it all right this second. I've been doing the same thing for the last several months. But on the whole, like what happens here is the pullback is this is basically like a double flush. Okay, so the pullback is designed to drive back through that main body of liquidity here to get you back to that gap. Where do we go from there is pretty straightforward. It's a lot, it really is a lot like that setup in, it really is. It's very, very similar to the setup in 2020. I'm going through it all day today, and there's virtually no difference in some ways between them. And, you know, at the end of the day, you would expect it to drop low if it does that, and then it looks bad, but really it's just a double bottom for liquidity. It's just a massive phase B bottom, which is awesome, because if this creates this bottom, you've got a lot of strength. It doesn't have to go lower. Like, I know I've got it going down low, but technically, like, it could just barely dip below, or it could just stay floating. It doesn't really matter. I don't think it's going to go that low. It probably goes barely below the bottom. And then just like what we saw in January, the setup is perfect for it. It's right where it needs to be to get you back above the jump here. So I think after that point in time, we go right back to like 11 to 12 area and then take off from there. It just depends on how you want to measure it. I've been doing it a couple different ways, and we were just talking about this before the stock exploded today. Now it's at 548. That was the first mark that we said it might hit. It's just a debate in my mind about whether or not we get to, do we ultimately get to the price that I want to get to, which is like $80. And if we do that, this arc is actually in the wrong place, kind of. Like, it's confusing. And that's what I was saying earlier. I'm not going to go back through it again. Don't worry. We're at 550, so now we're moving. We're at 12% on the day. Yeah, so I think that when you look at this big picture, it's pretty much the exact same setup. And what happened here was that the flush was used to drive the price back down to the gap. It stayed floating. And if you're kind of curious about a lot of the other stuff, we already went through it, but that's the middle. It's the same middle. So I don't have any expectation that it's going to leap over 860s and then go to like 12s and break out. If it does, cool. We're going to just run. Right back down to 548. Looking good. Look, I know that every time we have talk about downside, people get really annoyed. I'm not sheepish about it because I don't really care. Like, I'm going to trade it, not necessarily short it, but I'm going to trade it from where I think it's going to run. If I think it's going to run from down here, I'm going to trade it from down here. If I think it could continue, I'll just trade it from where it can continue. I don't take it personally if you disagree, but I think there's a lot of reasons for this. And I think a lot of it's just liquidity left behind. And I know there's people that are going to look at that and say, no, it's going to run. It's just going to go. I get it. There's a lot of other things interacting here besides what I've drawn on the chart. I do not pretend to know everything. I don't know everything. But when we have a comparable setup that works out, I typically pay attention to that. So if we were to run beyond and go to like the $15 mark, this could very well be accelerated. I just don't want to get into a position where people are thinking that's going to happen and then it doesn't happen and then you're screwed because it only went to 869 and then it drops all the way back down. And I think there's a strong likelihood of that. So I'm just going to be true to myself and tell you what I think. But you have to do your own DD. You're responsible for your trades, as everybody is aware. originally I had a lot more. I had a lot more hope that we would hit 1380. And I talk about 1314 a lot this year. And I just kind of like don't have that hope anymore. So it's not because I don't think it's possible. It's everything's possible in the market, but it's more because of like the setup itself doesn't necessarily demand it. There's a lot of reasons why we get stopped here. So this is going to be a critical mark, 650, 650, and then 860s. Those are my big numbers right now. If it gets above there, we may see upper nines or even as far as, 13s. It's not impossible. We're just going, man. Forget the Elliott wave. I'm not complaining, I'm just saying. I'm getting pretty overbought, but there's a decent amount of volume in that push, so you can see that volume uptick right there. It's really small on my chart, but it's significant. The reason why I do all the work that I do is so that I don't get stuck when it gets to my targets. I just kind of know where I want to go and then I get out. And I can watch it when it gets there. I don't have to panic and try to figure out where it's going to. I already know like generally where I think it's going to stop. The scary part is kind of watching it run and not knowing if any given pullback is going to be some kind of distributive action, right? We're just never feel 100% confident about it. So, yeah, it's pushed up pretty far here. So I thought that the Elliott wave might go to 548. It went to 554. I don't know if it's going to stop and pull back at this point. Sometimes momentum just goes. It just goes. So, we'll see. Fridays are weird days. Hey, has Max Payne changed? It was 450 on Monday. Book Max Payne, Booksy, Max Payne. Yeah. The same Max Payne that I said they wouldn't care about when it finally runs. Is it going to come all the way back down to 450 because of Max Payne now? Or was that just left there as a dangling carrot for somebody? I mean, I guess it could crash. It would really stink. It's gone pretty parabolic. If it crashed that far, it would be bloody, bloody, bloody Friday. It'd be really bad. God, I can't wait until we close. If we close at 550 on this Friday, or even 5, I don't care, above 5, I can't wait. I'm going to rub it in everyone's faces so much. You guys. Oh man, you're all like, dude, don't be a jerk. Don't be a tool. All right, I won't. It's not good to rub stuff in people's faces anyways. There's really only one person that I would be like, I'm telling you, dude, I've told you a bajillion times. When the stock runs, they're not going to care about Max Payne. They're going to use it against the market maker. I've been watching for 3 weeks. Today, when it's going up, the first day, you seem rather down. Makes me wonder. Makes you wonder what? Was I shorting AMC? No. But I'm not going to show you like my portfolio. I don't even have any puts. All I have are calls. I post them in the Discord group. It doesn't benefit you or me for me to get like way too excited. I'll change my tune in the way I speak about it because we're going up. And like when we're going up, we're looking for different things than when we're trying to break out. Like down here, we're trying to break out. We're trying to find supports. Once we start a markup phase, you're looking for those LPSs and you're looking for different things. You're going to look at volume differently. You're going to have a careful eye for like what a distribution might look like, those kinds of things. So when I say change my tune, that's what I mean. But I'm never going to be like the hype man. Not usually. I've learned my lesson too many times about that. Like, first of all, it doesn't give you clarity. Being optimistic, having a good attitude is one thing, but being like overhyped and into this kind of like FOMO, like craziness, it does not help you. I don't see any benefit in being like that. It just has never helped me make good trade decisions ever. So it's more in tune with like a gambler's mindset of like, oh, it's hot, let's go, you know. I don't mind going. Making money is a good thing. I mean, it's important for me and my family to make money, but I can sit here and objectively say it's not what's going to help me right now, and I need to be as level-headed as I can be. It's just a line moving on a black screen, right? It could mean everything or it could mean nothing. It just depends. If you're invested in it, you might think it means everything. If you're not invested in it, it means absolutely nothing. You know? That's the way I see it. So I'm trying to make sure that I don't go crazy because you gotta be level-headed to make good decisions. I won't be able to see a top if I think that everything is just going to keep going. And really, there's no reason to watch somebody if they're just screaming the chart on. Like, there's no reason to watch them. You can do that by yourself. It's just a hype thing. Man, this guy sucks. He's a downer. I personally would want to watch somebody who's going to help me identify if the stock changes direction, which requires a bit of a different perspective. I mean, anybody can be a cheerleader. It's harder to sit there and say, all right, let's see what happens. We are grown. We can handle our trades. You aren't our teacher or daddy. Is that what you thought? What, that I'm your daddy? I have a lot of kids then. Yeah, good volume. I agree. $970 is all I need to get 1.2 million. That's a lot. At $1.2 million would be like, I wouldn't be looking for a mansion because I'm married with a kid. I'd definitely be looking to reinvest like low-key, long-term financial gain. It's basically like retirement and college for my kid. It would definitely be life-changing money, but I think at my age, that could easily be tripled or quadrupled by the time I'm retired. So that's a lot for me. Nowadays, it's hard to say, you know, what you could retire with, but if you had a few million, you'd be okay for a while if you live right. Maloney guy update. Do you think we bounce between 5 and 6 for the next few weeks and then punch up, or do you think we move up? It has to happen now. Well, so I mean, on my chart, you can see I've got some chop here for a week or so. I don't think it's going to be super slow. There's really not much of an indicator in my mind that we're going to move into January. So I'm a chartist. I just sit here and chart stuff. So all I can do is tell you what I think the chart shows. The chart shows that you probably could have a topping action for about a week here, maybe more. And really you're just looking for some kind of a cross up and over from like maybe about 590 up to about 655. And those are kind of things that I would look for in the next couple weeks. But I don't think that the topping off of that action, it's really bizarre. It really does look like it might be Christmas Eve and for those that don't celebrate Christmas, that's December 24th. And then maybe the 30th. Those were that's a Monday. So like there's not really a lot of other, there's not much else in that direction. We did this earlier and I kind of made a mess of this chart, but we just did a bunch of this today. So there's a huge amount of grouping right here around 860s, and that's right around, again, that date from about the 19th through the 30th. That's kind of a big window, but I couldn't really narrow it down much more. I mean, it sort of anchors itself around the 24th, so you could consider it a Santa rally. I genuinely think if it doesn't hold there and it starts sliding back, we're probably going to be sliding all the way through March into May, even next year. It's going to be a long way down, like time-wise. Fast up, long down, right? So that's my opinion. You don't have to agree with that about the whole sell-off thing or whatever. I don't care. But the idea of like, where is the up? Timing wise, there's just not really much else to go off of here. So I have to use what I have. And to me, it looks like end of December. So yeah, there's a number of things that could happen between now and then. That's a long time. I'm talking about 20 days. I mean, 20 days is a lot of time for a move that's not that far. If you think about it, I think on the whole, this is like 50%. So if I'm right and it only goes to 869, that would imply that there's definitely going to be some sideways. Like you wouldn't just go straight up, probably. You might get there a little early, but more than likely you're going to have some chops somewhere. So I would place it around the top. Again, the triangulated top, which I think is pretty evident right here. And then about $5 to $6, $5.70 to $6, and then I put it again at $6.50 because I think that's a major supply zone from back yonder. So I've got a couple spots that I'm going to watch. There really isn't much to watch here. You know, like on this chart, you don't see that green line going up. It looks like there's nothing there because there's not. I mean, the fact is that once you jump the creek, if you've made the successful rebound and this ends up being a spring, once you jump the creek, you kind of just head back to the top. I've talked about it a lot in the past. I didn't really mention it recently, but like that's a real thing. Like you just kind of go up and make LPSs back to the SOS. So if this was indeed a spring and this is like the double bottom on the floor, which is what I've been talking about as a probability, then you end up just leaving. You just kind of go up, up, up until you get to the top. And the top is, for us, a little complicated because we have like multiple peaks here. 575 ended up acting like as a really strong resistance. And arguably there's more resistance at 575 than there is at, say, like 6 itself. Because if you look carefully, you can see like there's multiple hits here near 570s. And there's not really much up at 6. We had that one big move that was basically an up thrust that goes up in after hours to like 650s or something, and it drops back below. That's it. I mean, so to me, it's already kind of getting to the top. We're at 550 right now. We're at 547, 548. That's already at the resistance. You see this? There's like a little bracket right here. This is where most of those wicks occurred. if you use like a charting program, it probably tells you exactly what a top is. And I'm not saying they're wrong or anything, but a lot of times they're not wrong. That's not what I mean. They don't have to be wrong. That's what I meant. But a lot of times it's kind of like it's better to probably think about it as like a range. We identified multiple bottoms here. You could identify multiple tops here. The important thing is it pressing the range, right? So like right now, this has been a classic sell-off zone for AMC, right? It just has. So you can see very clearly, like anytime it's pushed up into the zone above 550, it's sold off. Has it at different times gone a lot higher? Sure. But I'm not going to sit here and just say it to somebody just because I think that it's like, I don't know, people get really weird about resistance. They're like, my resistance is here. My resistance, it's like, I don't care. Like, it's not to be mean, but it's just like, who cares? Like, it's the whole area is being sold through. 550 has definitely been a strong top. An SOS, which is a sign of strength, has to then push that resistance higher. And I would say that the first big leap for that is going to be this getting over this little peak that we made back in July, which is about 575. And I think that's going to be a big deal. You can get above 575 here. You're pushing that next big resistance zone. And then again above maybe 596, 6. Resistance is futile. Yeah, mansions are not usually really good investments. We have a mansion nearby us that I think when it originally was made, it was made for like 14 million or something. I don't even know. It was some ridiculous. Maybe it was like 40 million. I don't know. But they could not for the life of them resell it. It was just constantly like being dropped in value, and it was a legit like McMansion kind of thing. Not like some farmer in Texas who owns like hundreds of acres, who legitimately has like a big home that's sustainable because they make tons of money. Like that's not what I meant. This was like some random dude from nowhere had a bunch of money and just bought some land and built a giant mansion. And then he basically abandoned it, and it just became like this weird place where people come every now and then to look at it and try to buy it because he couldn't afford it. It was like too expensive, and he ran out of money. And it's like, well, that was dumb. People do that all the time, right? That's why these rappers come back 30 years later and they're doing like McDonald's commercials and stuff, promotions, because they're like run out of money because they use it all. Sports athletes and stuff. That's where they get most of their money anyways, is through like promos and junk in their later years. Anywho, I'm not an expert on mansion value, but it was funny because like it's just in the middle of nowhere. I'm not gonna tell you exactly where it is, but it's like you wouldn't even think there's a mansion there. It's like this really small town. There's nothing fancy there at all. It's super small, and then you just kind of like turn a corner and there's this huge mansion, and it's just abandoned, and you're like, what the heck? And I looked into it and I was like, whoa, this person lost a ton of money on this investment. You'd be better off buying like 5 or 6 plots of land in like a developing town. I don't want to say you should be a landlord, but you'd be way better off with your money like 10, 15 years down the road when that land's worth like a huge percentage more. Like seriously. If you're just in the business of like earning money, that'd be one of probably the smartest things to do. Just pitch a tent, live off the grid for 10 years, come back when the market's stable sometime and resell your land. I don't know. You'd have to upkeep it obviously, but then you're done. Then you're just done. You don't have to work anymore. You guys are like, it's not that easy, Booksy. I know. But hey, man, who am I? I can't tell you what to do with your money. I'll pay property taxes on the McMansion. Everybody knows what they would do if they got money. Like, in the back of your head, you've got like a list of things that you've been putting off and things that you need to do. But the challenge in life is going to be to, in my opinion, is going to be to manage that money well, be good money managers. Not make it, but manage it. I mean, to be fair, making money isn't exactly that hard. You guys are like, yeah, it is. No, it's not. You can go get a job flipping burgers and make money. You know, like, it's not that hard. You can go mow lawns. You know, there's all kinds of ways to make money. It's managing, it's the challenge. So, look at us right now. We're making money watching a little numbers on the screen move around. It's goofy. We'll see. I mean, that is interesting. If you guys are in the Discord group, feel free to share. We're up 11.5%. There ain't nothing wrong with today's price action in terms of the percentage. The volume looks decent. Excuse me, resistance was pushed. I'm not seeing any major issues. Not yet. Yeah, I think that this idea of maybe retracement, though it might be bothersome to people whenever we start running, it's not really that unusual, so don't get offended by it. But we still may need to come back to like 520. I know I keep saying that, and you guys are like, it's not going to do it. It's going to run. It's going to keep running. I hope it does. I hope it does. Keeps going. That'd be cool. But ultimately, like, there's no reason why we shouldn't either. Like, it makes perfect sense to come back and retest that level. And I wouldn't be surprised if it happened either tomorrow, I guess, would be probably most likely to try to bring it back below or keep it below 550 and kind of get it as close as they can to 5. That may make the most sense. I guess we'll find out. Timing in the market's tricky, man. The only timing I have is there's a, December 18th marker here around that time period. Could get there early and chop sideways into it. Could be right on the dot. Doesn't really matter. That's still a ways off, and there's a lot of space. It is going basically parabolic, but I think if I got my measurements right, then by my most accounts, I don't really see any problem with this either. This wave has been pretty solid. So, yeah, I wouldn't have any reason to suspect it not working out. There's still some time. And then the higher targets we already mentioned earlier, up near 8s, really are late December. So we've got 20 plus days potentially to make those moves. I don't know, Glenn, but it wasn't you. Oh, man. I remember a guy 6 months ago saying, see you October. And we sure as hell didn't move up in October. We didn't break out then. You came back like a week ago and said, see you in November or something, or see you in 2025. Credit where credit's due. Glenn did say a long time ago that he didn't think we were going to run until later in the year, around October. We actually broke down going into October, and we stayed low in October. We didn't break out until mid-November, late November, and now we're running. I can't go back and look for your comments from months ago. I already gave you credit, Glenn. You don't have to worry about it. I just said, to your credit, you did say it was going to be later in the year, and it was later in the year. And we can talk about that all day if we want. I think that when you look at this and you think that this was inevitable, that's a different conversation than somebody like myself who looks at it and says, I don't know if that was inevitable. I think it could have broken out here in September like the market did, but it didn't. You know, there's a lot of things that we can go on and on about and debate. If you feel that your capabilities are worthy of praise and recognition, I would advise that you switch careers, because if you're somebody that's not actively like constantly trading the market, but you have like an incredibly good knowledge of it and you're able to predict things like that really closely, you probably can make really good money just trading the market, you know? And if that's something that you want to involve other people with, then you can do something like start a channel and start talking about stuff. And I understand that sometimes people are not like wordsmiths. Not everybody wants to sit in front of a microphone and talk and hear themselves talk all day. And it's exhausting. It's a difficult job on some levels, if you want to call it a job. But at the end of the day, like, if that's something that you want to do, then you should do it, you know? Yeah, I know, but it's okay. The truth is that everybody's right at times, everybody's wrong at times. I think the process of, all right, goodbye. I don't know what else you want. You just came in to say you were right and then you left. Yeah. All right. I didn't think I was being down on him, but maybe I was being a little down on him. I was kind of a jerk at first. So, apologies, Glenn. What I meant to say is that if you're somebody that just wants to get recognition and you want to do these things, then just do it, you know? Everybody's going to have times when they feel like they're really right, and other times they feel like they're really wrong. Booksy, you are a jerk. Yeah. Sometimes. I'm working on it. T35, kitty kitty, T35, kitty kitty. I wouldn't say that. I think there's a yeehaw. I think there's kind of a misunderstanding with my relationship with Glenn Miller. Well, Glenn and I have gone back and forth at times, and he's been right at times. I've been right at times. I don't know. I like him around because he's a contrary voice often, which is good. You don't typically learn a lot if you're in an echo chamber, so he never really ever. I think what bothers me about it is always and I'm not just gossiping here, but I've said it before. Is it he kind of only pops in just to say how, like I told you so, or drop his like 1 cent, you know what I mean, like his one line prediction, and then he leaves. He's not very conversational, so it's very difficult because when you don't give a reason for something, it's kind of hard to like respect it, and that's a challenging thing in the market because it kind of makes it sound like I have special information that you don't have, and I'm not going to tell you what it is. And it's like, come on, man, if that's the way you're going to be, then I'm not really a fan. Like, I just can't be. Because a lot of the YouTubers that do that stuff, I just find to be kind of gross. I'm not trying to be mean. I don't know them personally. I don't know why they're doing what they're doing, but when they kind of go off that ledge of like, I've got information that no one else has, and I'm like, okay, I'll tell you right now, I don't have any information that no one else has. I think I do a pretty good job of putting things together, but really everything that I have is pretty much derivative or borrowed from mathematics, which anybody could do. Like anyone who understands waves can come in and do sine waves. You don't need me to do it for you. It's nice to have somebody work with you on stuff and to like learn together. I get that, and that's why I do it. But like, there's nothing about it. I don't even advocate for some special like theory about fractals or algorithms anymore. I genuinely think it's all just wave-based algorithms. I don't think it's mysterious. Like you have to memorize some complicated scheme to figure it out. You don't. Comparisons can help. They're good. Proportional comparison can be really good. But on the whole, like, there's a lot of information here just based on what you're seeing. Like, you don't have to know every little detail. I think that's a big time drain for most people, and it's not ultimately worth it. I went down that route for like a year, and it just didn't. I learned a lot, but it eventually just became like, why am I worrying about some bizarre like sequence of events when you can pretty much just tell, like, this is the direction bears want to go, this is the direction bulls want to go, how are the waves going to interact with that? And then pretty much everything else, again, falls into place when you do that. So then you can start seeing, like, continuity and, like, how things look visually, what the algorithm, quote-unquote, which is really a composite of different operators, what that looks like. And that's just behavioral analysis in the market, which is essentially all trading is like understanding what's going on in the behavior of the market. So I don't think it's a special thing. And it really bugs me to see like that kind of stuff. So when I get that vibe from people in like chat, that's usually when I get kind of quippy and like you can hear it in my voice probably, where I'm like, okay, because I'm not impressed. Like it just annoys me. Like, I don't find it to be impressive if you think you have special information and you get some prediction right, and then you come in to tell me you got it right. Like, okay, good. I don't know. The praise of man is very fleeting, and it will go. And it doesn't matter how good you are, eventually you're going to get it wrong. So I'm not on board with it myself. I guess if you want to, it happens every time. Every time the stream gets like crowded, there's always like a few people. So this is 5:35 now, and I don't really think this is like a bad thing at all. We did push up above 550. We tested it. We're kind of backing up. We really did the same thing earlier today as well. We pushed up above the top here at like 520s, and we backed way up. So if you're kind of wondering, like, where does this put us if we're gonna say, oh crap, we're overbought on the 4 hour or whatever? Yeah, I mean that was given. We were coming into that territory where you may start experiencing a pullback. That's the reason why we talked about a pullback first thing. We were talking about maybe coming up to like 550 on this wave and then coming back down in a retracement so that you're prepared for that mentally, emotionally, psychologically, whatever you want to say. It's not bad. This is good, but you have to then like kind of take into consideration what happens next. So what you don't want is you don't want an equal volume kind of heavy sell-off that then pushes below previously captured supports. So I'm kind of zooming in a bit because there's not really much information on the candles right now when you go to like the hourly, and that's a good thing. It's not a bad thing. It's just that I can't see it. So I'm going to have to zoom in to see kind of where those supports were built on the way up here. I haven't done this in a minute, so we'll do it right now. Yeah, so it's already kind of slid beneath this support right here. Doesn't really look like it's going to hold. You can see the interaction of the candles here right around 530s, and then it pushed out on 534, and it's already back below it. So this, I'm going to guess, looks like that cat ear where you get that waveform down, probably 1, 2, 3, and then it drops. So this is the hook. Now we're on the 1 minute, which is real low time frame. So this is a prelim supply. There's a wave up here that's like a 50-50. So you can see the S curve right there. So the prelim supply, which is it's supply trying to stop the advance. There's a sell-off happening in the middle here. Important to note, at least on the 1 minute, which again is very, very low time frame. Maybe we should go to like 6. 6 is my baby anyways. It's like, all right, weirdo. But you go to 6 and you can see that halfway point is essentially where that first peak was, and that would be where the sellers would come back to, and they did. Now, if they continue to sell down, that could be a problem if you've lost, and again, you pick at the volume pickup, if you've lost that support. I'm not 100% sure it's completely gone, but it looks like it's pretty low on the... So I did it like a sideways kind of an arc here, and it looked like it broke. But if you do like the diagonal, it actually comes back down pretty far. So in terms of a retracement on the move, it looks like this is all just kind of bleeding out. So there's a constant push up here. This is the breakdown. So it's like a rising wedge almost right there. Wedging action into the top, volume's coming down, RSI is pitching down. So you knew you were going to get that pullback. We knew it was coming anyways, so I'm not like surprised by it. So maybe we can use a retracement from the bottom of the triangle. Maybe. Looks like it might aim for 520s, which is what we were thinking. So that's about right. We'll see. Retracements don't have to go all that far down, but that's basically a 62% drop from the breakdown, roughly. So it is about where we thought it would be, which is like 520. That does give us a chance here to also catch potentially catch this creek, and then, maybe rebound. I'll say this is pretty wide on the top. So they've given themselves, I say they, I'm talking about institutional traders who played the top. They've given themselves a lot of room here. The creek is not, 38. That's the same number, isn't it? Yeah, I bet it's a parallel. So it looks like they've given themselves a space to build out. It could be a flag. It could be anything. We don't really know. But there's clearly like a 1-2 here and a 1-2 here hit that define a downward arc. So it could just be a flagging motion, right? Don't read too much into that other than like, hey, bears are trying to knock it back down, and that's where they're going to head. Bearish movement, I should say, not necessarily bears. That's probably where they're going to head. And then we can use that in combination with like something like an uptrend. And this would help triangulate possible directional movement. So it looks like for now, there's quite a bit of space since they dropped from 550, 20 cents here. We're up 8% on the day, which is still a huge gain. But this certainly could come all the way back through this channel pretty low, and they've given themselves plenty of room here. I'm looking on the 6th of December because I'm trying to see where that day ends on this chart. Well, we don't want to go all the way back to 5, but I suppose you never know. Sellers are definitely going to try to take off to the downside if they can afford to. Try to sell it back down. There's going to be a lot of option sellers who are panicking right now because their options are running into the money at 550. And certainly going above 5 when max pain was 450 would be bad. So like there's going to be a lot of option sellers who are kind of like nervous and want to drive the price back to 5 today and tomorrow. And we'll see if they have enough ammunition to get it low. Yeah, I'd venture that if it goes below 520, we may be looking at 5, and that's easy enough to see. But for now, we're just going to kind of watch it and see how it goes. Maybe you get a reaction back up to like, I don't know, 540s or something. Maybe. It's just kind of selling. There's probably a lot of stop losses and crud. This is a big cat ear on the RSI, and it's a divergent RSI from way down here at 512, so it's ugly. I sort of expected this because we weren't, it's kind of why I was like thinking we probably need to come back. We weren't making any supports. There's nothing wrong with it. It's not like broken, it's not like horrible. It's just, it is what it is. So I had drawn coming back to here, and I still think that looks right, but it's very narrow. Which means it probably happens pretty fast. It may not be that bad. We may end up chilling out above 5 Friday if he keeps getting knocked down. But based on this setup, usually only one of two things happens. Either you stay in the channel and you wait till the last minute to break it, you know, if this is like an ABC correction, maybe it waits till Friday and then kind of jumps out going into Monday or something, for example. Or this initial creek, which is derived from the top 2 points here, that is something that could be jumped early. Usually if this is jumped early, what you're going to get is like a bigger auto reaction. So usually if that does get jumped early, this auto reaction will come back up pretty high, and then you'll kind of chop down on the outside of it. It doesn't mean it's gone, unfortunately. Unless it's formed a bottom already, that creek is still very much alive. So if it's already formed a bottom and then it jumps the creek and finds support, then I don't worry about it. But if it just hops over it and then pushes up high, you got to worry about it. We're not there yet, so yeah, I mean, GME didn't quite push up enough right now. I'm on the hourly, and we'll see how this candle ends, but I mean, you can see it visually. It's like wicked above, wicked above. Much like we were just talking about on AMC, this had a creek on the outside. It's like hovering over it right now. So if it drops this creek, it's going to head right back down like we kind of predicted yesterday. I don't know if it's going to go all the way down, but it would be a retracement here, which is still pretty far. So it is looking like it could potentially still be coming back down to like 26 if it doesn't hold. Okay. Big if. Yeah, this is kind of like part of the concern always when you're talking about upside is you get really excited, but then you have to kind of maintain balance. It still looks like it's pointing up towards like 580s. It's still possible we can get there, but let's take a look at that line we drew earlier, see where that is. It's pretty low. Yeah, I mean, everything kind of points to the same pocket around 520. It's essentially like the top. That's good, though. Makes it easy. I don't want it to break it. If you're wondering, like, from the bull side, of course you don't want it to break. I don't think AMC is going to see $580, but you never know. I think we're very likely to get back to like $45 to $80, which is a big area, but that's where I think we would end up landing if we do get a bigger push up. Hey, MPW is not doing anything. That's okay. I'm waiting. I'm a little nervous about it. I think it could slump pretty hard back to this floor over here at like 393, or even go down to that 384 level, which is like a gap. But I genuinely think that it's probably going to squeeze again into, again, like a lot of things. It's a weird chart. It doesn't look very strong on some time frames. It looks kind of horrible, to be honest. On certain time frames, like the daily, this looks really bad. But on the 4 hour, it looks pretty good. And I still think there's a strong chance it's going to get at least back up to, I don't know if it's going to make the run to 8. That's a bigger what if. I think it's a big ask, because it's a tough one. It has to do certain things. But if it can get above this creek here, I definitely think it's going to go up to like 530. Then we have to kind of debate whether we see something like AMC did in 2020, where it kind of piddles out into the new year instead of running further, and it basically kind of boils down to the same spiel. I know this is a messy chart, but ultimately it would just kind of boil down into a similar bottom like the 2020 AMC bottom. The good news is, if you didn't get to experience that, we might get 2 different charts that are doing something similar, because Booksy's a crazy man and went and found a real estate investment trust that basically looks just like the AMC chart. And if it does that, that's cool. If it goes up in an S curve here, it's going to be a pretty nasty like spring rebound, and it's going to probably rocket into the new year all the way to 8s. Changes the chart really dynamically. Obviously, it would be a huge move, but I don't necessarily think that's going to happen. It's a debatable thing. It's really more of like whether this is an S curve, and I don't know. It's a very difficult one to say. Unfortunately, there's a lot of bearish inclination here that it wouldn't actually go above 530. So I could easily see it going above 530, or going up to 530, not easily see it going up to 8, although it's there. I don't think it's going to hit it. I would make a ton of money if it goes up to $8, but I don't think it's going to do that. So we'll see. It may be very similar to AMC and GME, and get that pop, but unlike AMC, it actually did what we thought AMC might do back here in September. It did the second top. So at this point, I don't really see a reason to go up, unless it's just, again, finishing an S curve, and it's just this huge spring motion here. Otherwise, I could see it easily coming back down. So charge point was another one I looked at this morning. It was up like 20% at one point today. It's fine. There's nothing wrong with this chart. It's kind of doing what I expected it to do into earnings, which is bounce out and then potentially come up above. It needs to find support now above 123. If it does that, then again, like we talked about with AMC, and it does look like this went higher, so that's good. See how that peaked right above the top? It pushed that resistance a little bit, right up to 150 instead of 149. Seems insignificant, but that's very significant that it pushed the resistance, because that makes it a do or die kind of thing, like where it's going to either come back, find support, and race, or it's going to dump. And those are the kind of the moments that you want as a trader. You don't want to be stuck in the limbo of like a phase B middle where it's just going sideways. So this is a really good opportunity potentially to catch what's called a test, which is like if this is a spring and it bounces back above and it can hold, that's a test. And then it would just be like an advancement of, and I got that pretty close, but then it would just be like an advancement of, oh, it did push that resistance. Never mind. That's from another line. Yeah, then it would just be like a spring that goes up to the top. Well, the top of this range is high. This is like a auto reaction phase B top way up here at 240. So like in theory, this could be moving from, if it works, could be moving from 120 to 240, which is like 100%, right? And then from there it could SOS and potentially go higher. So it's a big deal. It's a big move. It could be a huge trade. I'm watching it really carefully. It's a bit of a dangerous trade in some ways, but it's there. And I actually think that what probably happens is that it could end up being very different from some of the others. I don't necessarily think it sells off the same way, but it could end up being a move up into February. We'll see. Much like AMC, it's kind of like a lot of this stuff seems to be boiling out to the end of the year. And I suppose some folks are going to look at that and suggest that, oh man, it dropped right through at 520, didn't it? Some folks are going to look at that and it's just bleeding out. Stupid AMC. Some folks are going to look at that and say, sorry guys, I'm just like, I get so annoyed with the way the stock moves sometimes. Very low volume, it came really far, like on very little effort, which is annoying. So really low volume, 2 bars there, and then they just drop the price all the way back down on like nothing. So that irritates me. It's in the right pocket. It's just, why? Why not just hold it, you know? If you're strong, just hold it. 516? What's that about? Doesn't even make any sense. Mr. Grumpy Pants coming out. I don't remember 516 even being like on my radar. It's not. It's 518. Go from the bottom of this move. It's a bigger retracement. So that's also 518. 518 is the number, not 516. I'm a little nervous about this as a... Where's that going? Okay, that's right. I'm going to fix this real quick, make sure that... I'm going to fix it, make it look better. No, I'm going to go back and just make sure this is on the right mark, because sometimes when you scale stuff, you realize it wasn't on the right spot. I think it is, because I think I snapped it. I'm using it like a fan, but it's not wanting to go to the right spot again. It's too precise. So this is really 596. Okay. Big whoop, right, Buxy? Well, I mean, it doesn't have to be perfect, but if you're going to be looking at nitty-gritty like pennies, you might as well make it right. That's not looking great, I gotta be honest. It looks like bears have taken over to try to drive the price back down. That's a heavy amount of selling now. It's picked up quite a bit. Well, if it bounces back up, that's fine. I don't mind finishing the day a little bit higher. You know, if we can get back up to 530s, that's great, but at least for now, all I'm seeing is a lot of weakness because there's not really anybody stopping the buy or the selling through here. And I know that technically, yeah, this could go lower, but if this was a sign of weakness, like that's not good. This thing right here. So I know what you guys are probably thinking is like, what the heck are you talking about? Well, so when we came down, we made a high. It was earlier today, so I can't say dates, but it was a couple hours ago. We made a high here around 512. When you look at when it pulled back, it checked it once, it bounced up, and then it pushed beneath it right here. What that tells me is that this could have been what's called an SOW, a sign of weakness, which is like, it's basically like a bear marking off, like, I don't want to say marking their territory, but kind of. It's bear scat, right? So it's showing you like a sign that somebody's trying to drive the price down and create a resistance, or excuse me, a support that actually drives lower. So in this case, the aim would probably be something like 5 going into Friday, right? If that's what we're going to assume, like, yeah, we'll take it up, but we'll come back down because we're not going to like go too far yet. We don't want to go too far yet or whatever. So this becomes what I call like a mild sign of weakness. You could have looked at it and said, oh, I think it's a spring, Booksy. Maybe. We'd have to look closely at this bottom and see if it was. That's the debate, right? It's easy to argue because it pushed up after. You can say, oh, it was a spring. So what? Yeah, well, we have to go in tight to like a 1 minute time frame and see if this is like a 1, 2, 3, 4 kind of thing, and then it pushed out. But in like the simplest ways, I would just look at that and say, okay, that creates a new, what's the word? Creates a new creek, right? A new potential resistance and support. So unfortunately, AMC's been of late has been in this position where it likes to run up and then retrace like really deep. It's always done that, but it's been doing a lot of throwbacks where it just kind of comes all the way back down to the floor again. Like it just keeps going back to the same levels. So my concern is that there's something unresolved around 5, and so there's still like a lot of liquidity there, and somebody just wanted to take it up, and so that they could then, get high and sell off, knowing that they're going to come back down to 5 anyways. It's almost like, yeah, we get these big swings whenever we move up, but you don't want to see that retracement bleed back through supports. So earlier we had talked about this guy, which is the rising trend here, and I didn't adjust it. We could adjust it now and put it on this top, which probably would be better anyways, because I said like it needed to jump this and come back above, but it ended up going through it, right? Okay, what are you getting at then? What's the point of all this? My point is that nothing's really holding as strongly as I'd like it to. Period. I don't like it. Let me check some other charts. If we can end up high, I'm not going to be grumpy about it. Right now, it looks like a pretty nasty little reversal candle that, again, it kind of came right back and actually closed beneath this other candle. So you can see that the closing value here was 538. The opening value here is 537. So this whole candle is within that body. That's kind of ugly. So there was some kind of a major resistance there, which I guess makes sense. That was a historical resistance for us around 537 way back. I'm actually going to move this to there. So I think that's more significant than I gave it credit for. And then, I don't know, I guess if from this point of view, like zoomed out, it doesn't really look like that dramatic. You can see it walked through it. Weirdly, that because the candles don't show you the little nitty-gritty backups. So you don't even see a backup here. It's just like a big fat candle coming back down. There's no like secondary creek on this bigger motion. It just doesn't exist. So it's bizarre because then you look at this and you're like, well, technically, does it really matter? You know, maybe not. Just getting worried about nothing, Booksy. It's just a back test on that support. It still has to hold. I don't think there's a question in my mind about that. If it doesn't hold, though, that's ugly because you see that big wick. And if this just wicks below, if it pushes below here again, you're going to have a double wick below 520, like a double body candle that's wicked above. Where's that volume, man? We need a big push. So dumb. This is not a good candle. This is a 2-hour candle. This is the kind of junk we were doing below when we were back down near that first creek. Way back here. It wasn't even that long ago, but for like a few weeks. Or we kept like wicking up, but then we wouldn't hold it. And every time it did that, I think on the daily or weekly or whatever here, it was like wick, wick, wick. It just refused to close above that creek until it finally did over here on the 22nd of November, which isn't on the chart right now, but it's super annoying. You don't want a candle body to open and close beneath an important resistance level. So I don't really think that that's a great thing if it can't close beneath it. It just shows some weakness. Yeah, it's turning down a little bit. That's okay. Let's check the 4-hour. So the 4-hour just kind of smooshes it all together. It's the same problem. Massive wick. Good volume on the candle. It's just the whole candles are retraced. Excuse me. The whole entirety of it looks like a big giant retracement. And again, it's closing beneath this resistance. We don't want that. It's not an all the time thing, but just generally speaking, that's not a good thing. It's just not. Like, you do not want to see this kind of a body or this kind of a candle wick with a close below. We've dealt with this kind of stuff before, if you recall, many, many times during distributive actions. So you don't want that. Don't tell me what I want, what I really, really want. I'll tell you what you want, what you really, really want. Yeah, jeez. Stupid. And this is why you don't go hype mode. You wait. All right. What's going on with 516? I haven't really used 516 as a particularly important level. I recall 520 being kind of important. Okay, well, how high did we go? We went up to, what's that value? High of 556. I need to check something. Why 516? Is there a fib there? Am I missing something really obvious? Let's double check. You guys are like, well, it's obviously was used as a resistance. I know that. I see it right there, but really back in this August the 12th period, I get that. I can see why that would be a problem, but it doesn't feel like enough. I don't know. Like, it's odd, because like I wouldn't have picked that number. It doesn't mean anything. It could just mean I was wrong, picked the wrong number, but I just wouldn't have picked that number. So I'm curious what in the world the operators are doing, trying to knock it underneath 516. The Bears. All right, hang on. 533. So that's closer to that 538 number. That's the 0.5. That would have made more sense. There's nothing really there. What about retracement the other way? I'm going to flip the chart. You don't have to flip the chart to do this, but I'm going to do it anyways. Kind of curious because I just want to see it. Should I get this right? Nope. 520 is the 236. Let's think bigger. What that green line is? Maybe that's one of the tops. Those green trends. I don't know. I'm just going to go here. There it is. That's 512. Okay, we found it. That's close enough. That's not 516. No, but that's probably where the number came from. So if you look at it from a bear, like, because it's just a weird number, you know. And I'm just trying to figure out why that was being even at play right now. You can find a fib for anything, right? Kind of self-fulfilling prophecy or whatever, but actually, no, that's wrong, because I had the wrong number. Never mind. Well, I mean, it's kind of sandwiched between them, but I would have said 5, so I don't know. Whatever. It's just there. Who knows? I mean, when you go back and you look at breakdowns, it certainly was used. I mean, you can see 516 was used many times, but I don't really have another good reason for it other than maybe this interaction back here in August. And I suppose it found support there in July, and there was kind of a breakdown level right there in June. We noticed there was some continuity with, yeah, right there. Maybe that was the key. Yeah, okay. I see it now. I just haven't used that number. That's why I'm trying to figure it out. I don't know why I wouldn't have used it, but I didn't use it. Right there's a breakdown. It's actually more like 518, which makes more sense than 516 to me. That right there is the hook that broke the camel's back. So you can see right here this move up. It starts the downward motion. So it's the last point of supply here. LPSY, right? Was at 518. That was right after that first Roaring Kitty fiasco back in June. It had already made a sign of weakness here. It made a slightly lower low in June 10th, and then it just came up and did a sell-off. But this is where it kind of chose to break down. It's like right at 518. So I'm kind of moving stuff around a little bit. I don't think it's 516. I think it's 518. And then I think that probably is right, because if you look forward, that still looks good. I know, you're like, well, shouldn't you already have this on your chart? Yeah. It might even be the retrace from this downward move. I didn't even do that. Oh, no, he's doing it again. It might be. No. Sorry, it's not. It's just not. I don't know. grasping at straws, Booksy. Typical Booksy. I can't tell if something's really important until I check it out. So I was just checking it out. I don't know if it's super important, but it's definitely like a level of resistance for sure. It may be, again, part of that topping action that we've been kind of looking for. We need to get back through it. I marked it off with these 2 gold lines. Weirdly, the 538 is kind of in the middle. I think it's actually probably representative of a center mark there. I'm not going to worry too much about these other creeks right now. I'm just going to kind of look at the basic setup here. So this was already a push. This was already an advance here because it went to 519. And we had talked about it advancing past here. It did not advance past 525 until this bar on the 4 hour. So it's done both now, which is good. Just deleting everything. Just trying to clean it up. Yeah, it looks fine. I still think it'd be better to close above 520, but you get what you get, right? And I think it's unfortunate if it doesn't, but I can't really control that. Doesn't mean it's broken. It just, this is what I was talking about with the breakdown. Remember, we talked about what would it look like to walk back to near 5, and it was this. This is why I'm not happy right now. Now, it would need to probably push and make a lower low still. We're not even there yet. We haven't done this yet, right? But who knows? Like, it could be pinned tomorrow underneath 519, 518. That's a historic supply spot. So I think that's why the bears, in this case, probably, again, your option sellers are trying to keep the price underneath 518. If they can keep it under 518 tomorrow, they have a better chance of knocking it down towards 5. And you could manufacture kind of a breakdown all day tomorrow if that's what you wanted to do. So, well, if people would exercise their calls, and I can't tell you what to do, but if people exercise their calls instead of holding them and trying to like just sell them, it'd be a very different story because the market maker has to hedge for people exercising. They don't have to hedge if you sell the call. You know, they don't have to do anything. It just kind of takes them off the hook. You make money, which is great on the premium or whatever as it trades hands. But whatever. Exercising is what causes buying pressure. And that's ultimately what the market maker would be doing, you know. In reality, if this had driven up to 550 and everybody who had calls at 5 or 450 or 550 decided to exercise all at once, yeah, I mean, you're basically ensuring that there's a huge amount of buying pressure. But a lot of that probably was your market maker too, hedging as it pushes up. Then they're going to unhedge as it comes back down. Like, they're not going to keep those shares if they don't have to deliver them. So, hedge, unhedge. Right. Well, my point was that a bearish outlook would try to knock you back down. This is what we did earlier. I don't know. It went really high, went higher than expected, but I had both these on the chart. So this is essentially why I'm worried, because you don't want to see it get knocked down and pinned below here. That's not the end of the world because there is space. So if it managed to hold above 5 tomorrow and like stayed above 512, 510, 512 tomorrow, I mean, it could be potentially still really bullish because you could have like a creek cross and then not break down and kind of do what we did here, but on a smaller scale, right? Like a more micro scale here. Just push up. It looks like we're not going to get our answer today, so Yeah, so it's a similar motion. This was actually a very similar motion on the small scale anyways. It was kind of a rising parabolic wedge looking thing. And then this drop back would be something similar. So it is definitely feeling like a parabolic move. And all that would be required, I guess, if I want to go so far as to say it could just hold here tomorrow, that'd be enough. I think it could be enough to kind of propel it up again. And this time it would be like a bigger motion. Maybe it gets to sixes. That'd be pretty wild if it ran to 6 on Friday or Monday. Yeah, it's going to short squeeze if it can hold above 124. It might take a few days. You know, I don't think it's necessarily going to be perfect until I see that. Until I see that support, I'm not really convinced. But we'll see. We'll see. I mean, it's not complicated. No, but I mean, I don't cover it that often. I mentioned it because I had mentioned it a couple times recently because it was building out on a bottom, and it had done something to me that looks a lot like an auto reaction phase B top, and it looks like it's boiling down, and it was going against this creek here, which you can see on this very bold blue line. If it jumps that creek and then it holds after making a low here, it's essentially like a spring. And if that happens and it can hold 123 now after it's breached the wall here, it's essentially like a retest. And then you just go all the way back up to the top. Easy 100% trade. I mean, sincerely, it could bleed up that quickly. And I don't think it's a big deal in the grand scheme of things because, you know, where it is at the top is probably still undervalued. But the chart itself is a good setup. So I had been mentioning a little bit here and there, like it looks like it's getting ready for a spring. And then the earnings was kind of a so-so earnings, but it had beat revenue and missed on EPS, but it pumped up pretty far. It pushed resistance at 150. So if it can manage to hold this support tomorrow or whenever, I don't see why it wouldn't just go because this is technically, again, right where it needs to be. And then it's essentially ready to go. This is a big M cross right here. So you get a 1 against the creek, pull back, push, break the creek, pull back. Not only is this retesting a creek, but it's also the creek jump, which is a major downtrend here, right, from way back in July. Not only is it jumping that, but it's also potentially, if it comes back and fills this gap, it's retesting that floor, which is like a phase B bottom. So it's a big deal. Like, it could be a huge move. If it manages to do that, it should start accelerating up. Much like these other guys going into December, I think is likely. And I think it goes all the way potentially to the top. Now, it doesn't mean it's going to necessarily break out or whatever, but it would be something like this. So it's a big move, you know. It has to make this and hold this support here and then jump again. That to me would be confirmation enough to start really pumping it in terms of like I would buy. There are some gaps, you know, there's one up here at like 167. I think there's another one. I don't know if it got filled. There might be one up here at like 219. But that's just kind of whatever. You know, those are just like stops along the way kind of thing. That's about halfway up. I wouldn't say much more than that. So it's been running pre-market to 380. What? Oh, CETX. Yeah, man. Anfodrew. Nice name. Oh, good. We hit 520. I kind of wanted to close higher, so let's hold 520. That'd be nice. Be above. At least we'd be above that floor. I don't want to close beneath 518. Oh, GME, boy. Yeah, I don't know what to make of that. That doesn't look as healthy. I guess we'll find out. MBW taking a little bit of a plop on the end of the day here, down to 416. I think it's got to come back to 4. It's like really close. But if it makes a higher high and it starts breaking out, it's probably just going to go. I haven't looked at anything really today. We can really briefly run through some, but it's interesting where IWM is. That's the Russell. What's that line, Booksy? I don't know. I think it's the trend. Yeah, it's like the top of this trend. It's kind of been wrapping around it, so I don't know if I would expect it to bounce here. It doesn't really seem like it would bounce there. It may still pull back pretty far before it tries again, but it did make another advancement and then pull back, so I don't know. It may get a little bit of a swing and then it pushes up. 520 is what it looks like on my chart. Is that right? You got 519, 520 on Robinhood. Well, anything above 518 is better than below 518, so that's what we kind of figured. So if you guys are getting numbers above, it doesn't mean it's perfect, right? Like things happen. Maybe tomorrow it still takes a dump, but at least for strength purposes, 524. Oh, that's way off my number. Mine still says 520. Oh, you guys are looking at post-market. Okay. Yeah, anything above that floor, that's a good place to be. So I'm okay with that. I mean, it's better than being below it. We've seen all kinds of shenanigans on AMC, you know? Like, that happened once before over here, and I thought it was good, and then it still dumped. Right back here, like it closed above the creek, and then it was just like, you know, I don't know what to make of that. So, like every now and then, like it doesn't follow the rules. Most of the time, closing above a support, like we did here, like this was good, and then it's up, you know. So it's like I don't know. It's usually a good sign, you know. I'm happy that it's at least above it. I didn't like how low it went, and I definitely already expressed that a couple times. So I said I'd look really quickly at CETX or whatever it is, and then I'm going to head out. XRP. You asked me about that yesterday, too. Is XRP the one that everybody thinks they're using for collateral with GME? Somebody asked about XRP. Is that the wrong one that I'm thinking about? Wow, look at that. I mean, the run's already kind of happened here, but look at that move. Okay. Market cap, XRP. Yeah, I mean, this is sort of one of those situations where I don't want to say like you missed the boat, but it's kind of already happened. Yeah, I mean, it's just a wedge break, so it's going to go as far as it needs to go. If this is a long-term flag, sometimes the flag is a good indication of where it could go now. So the pole, it is often the case. I mean, that's crazy high, but that is often the case what happens, so that's pretty severe. Maybe. I mean, yeah, I don't know. Maybe. I'll look at CETX. Don't worry. I'd probably be inclined to just trade this like level to level, as if it's going to try to form some kind of an upward trend, and then just go from there. This is like a midway point. Yeah. Yep. I don't know. XRT is what you're thinking about. Oh, wrong one. Well, yeah, so if this SOS's and doesn't back up, which is, again, it's possible, this could be the big run that then drops back down. Unfortunately, like, there's not really a way to know until it starts happening, because like an SOS can take some time and then it could still drop. So if there's a market correction, maybe you see that come back. What I'm saying is what's called a backup. A backup would go back to the creek. It probably wouldn't go all the way back down to the bottom. It would go to like here. It'd be like a reasonable retracement. I mean, it's a stretch. This thing looks pretty strong, but it would probably be like a 50% retracement. And there is there is a preliminary supply there. So there was an early attempt to stop the advance right there. What? I did something weird. So yeah, I mean, if it does SOS and then backs up, you'd see it come back down to like probably here, and then it would try again. But then I would be looking at this middle. If it doesn't matter, it could go from the SOS straight up to the middle, or it could go from a backup, and then you would be looking at this advancement here. More than likely. Pretty straightforward. The worst case scenario is a distribution, but in order to distribute, you'd have to drop below some pretty critical levels. And I think at the end of the day, it's probably going to be like, you'd probably have be way down here at like 34 billion or whatever. So, you got a bag at 0.41. Wow. What's been going on with this? 2 hour cross up on MACD confirm. Tomorrow going to be great unless we gap down big. Reese, are you talking about AMC? Yeah, I remember this. Right. Yeah, this is a weird chart because it has potential for some swing action, but it looked like it was going to kind of terminate soon. It doesn't really seem like there's a lot of potential if it doesn't go like now, because it was a pretty short-term little chart. It did. You said it was gapping up what? I'm going to go back in the comments here. It's been running pre-market to 380. Oh, the marker that we marked off. Yeah, okay. That's not good if it's not letting you participate in it. Wow. That's not even like hidden. That's like right there on the 30-minute. What do you do with stuff like this, you know? I don't know what that means. Does that mean they just did it without the market and they're not going to let you do it? Pretty annoyed. I mean, I'd be pretty annoyed because it looks like it's where it's supposed to be. I don't know. We were pretty sure this was supposed to be running up today to 380. So when did that happen? Today? It ran up to 380 or 370. Wow. That's pretty annoying. I don't know what to tell you, man. Like, it's exactly where it should be. It's just not there. It's like it didn't happen. Like, it went right here. If you were to count that as like the daily, like it's right before the open, Thursday, today, it went right up to that mark. It just didn't let you participate in it. So, and then immediately on the open, it kind of pumps up here. It did make a higher high than the 329. So maybe the idea is that they're trying to, now they're going to build a base. But unfortunately, at this point, if it goes up to 380, at this point it's breaking out. And that wasn't the prediction, because I didn't see the wave going beyond there. So I don't know what to tell you. It's stupid, but that's all I can tell you. Like, it just feels like somebody just didn't give you they just didn't give it, they didn't let you participate in it. It couldn't have been any closer to what we kind of thought, but it's just not there. I don't know. I really feel bad. That kind of stuff really irritates me. Like, really irritates me. Maybe it's going to happen over here. Like, there's a little bit of a space. If I draw this out to this bottom instead of where it was, there's a little bit of room to pop to 360s. So maybe the goal here is that they're going to break this creek. It's basically like right over it. So maybe the goal here is they're going to try to break it tomorrow or something and have like a big Friday move or something. I don't know. I'm really sorry if it doesn't let you participate in it. But it could be that this is up here by Friday, so I don't know. Beyond that, I couldn't really say, because at that point, you're talking about it jumping the creek. You know, if it took till like Monday or something, you're way over the creek line. You're potentially breaking out at that point. It's like a reversal. But this is a weird stock because it had like the split and everything. There's a gap there, but it's just very bizarre. So, yeah, maybe, I don't know, because this would triangulate like to potentially like come up to that spot here if it broke out. See that triangulation there? It's sort of pretty, I would say it's clear. And that's not that far off. It's only Monday. Yeah. Oh, it's not crashing. I see it as it looks like it just kind of pushed resistance here. So, like, I'm being a little bit down on it because it didn't get to participate in that move that we saw right here. And it seemed like it went to try to meet it and just didn't let, most of the market just didn't participate in it. It happened after hours. So it's frustrating because then it looks like it's kind of like an up thrust through there that didn't didn't break out, but it didn't crash like you're saying. So it kind of looks like they're still trying to build a strength right here. I would say if it holds 3, then this is still potentially like a creek jump, you know. Technically, could be an auto reaction of phase B and a spring. And then this just has to hold support at 3. So if it stays above 3, you're fine. You're in good shape. And I think if it breaks out here, you're in really good shape. This is just like a bigger creek. So it's already leapt over like the short-term one right here. It tested it. That's good. I think if it jumps again, it could just go into like an SOS back to the top near the 380. But I'm concerned as to why that happened. It would do that in extended hours. I don't know. My cats are all staring at me with their demon snake eyes. Why are you not feeding us? Feed us. I haven't even looked at WTO today. Still in the same spot. Yeah. It's just struggling, man. I don't know. It's trying to hold its own weight up, but it keeps getting squashed beneath these resistances. So it is kind of what it is. If it can manage to get back above 33, or I would say 34, 40, then I think you're in good shape. But I'm going to make a marker here. You might be in good shape to rebound all the way back up through. But if it doesn't, then I don't really know where it's going to go but down. Because, frankly, this could just be like a big cat ear. with a sell down. It's going to go back to these other creeks because it's got to go back and find support. And the next support down, if it bleeds through 31, is going to be low. It's going to be down here at like 27 cents. So it's weird because it's had these kind of false breakouts. I'm not happy with it either, but it is what it is. Almost there maybe, but got to give it maybe another day or two and see what happens right here. All right, guys. Looks like we still got 520 on my trading view chart. That was a good close. GME is a little bit weaker. Still has a positive green day, but it just closed beneath that trend. So we'll see. I got to go. Got to feed my cats. Appreciate y'all. Thank you again for those that super chatted today. Appreciate that. And we'll talk to you tomorrow.